Okay, good morning everyone. Welcome to Byju's Exam Prep IAS. This is Shyam Gagoi here. If there is no issue with the sound, please give me a thumbs up so that we can start the discussion. Done. Let's start. So yesterday we continued the discussion on concept of Reserve Bank of India, certain important areas of RBI. We started with the qualitative set of tools. I hope you remember this qualitative set of tools. For example, rationing of credit, right, regulation of margin requirements, right, regulation of consumer credit, etc. So wherein we are going to target certain specific sector, and we are asking through RBI we are asking the banks either to increase or decrease the money supply in specific sectors. After that, we have discussed DICGC, Deposit Insurance Credit Guarantee Corporation. We also have discussed the concept of forex reserves. Again, when I say discussed, we have just seen it. We have not discussed certain components in the forex reserves such as special drawing rights. We'll discuss it, don't worry. Special drawing rights or gold tranche or reserve tranche of IMF. We have not discussed. I'm only saying because we'll discuss when I take up the idea of our concept of IMF. Okay, so after that, we have discussed the bank mergers in India, the issue of bank mergers. Why are we merging the banks now? Right, we also have discussed the concept of lending rate regimes, right? The marginal cost of funds based lending rate, right? Then we have discussed the external benchmarking, which was recommended by Janak Raj Committee and which is being implemented by RBI today. Then we started with the concept of Basel guidelines. I hope you remember this. Basel guidelines. In Basel guidelines, we are yet to start the Basel guidelines, but we were discussing certain concepts related to Basel guidelines. And I started with the term capital. I started with the concept of a capital. What is a capital? Capital is the money that is there with the bank. Simple. Capital that is there, the money that is there with the bank to conduct business. Right? For example, when you start a business, will you not invest money? Right? Is the logic okay? When you start a business, will you not invest money? Of course, yes. That money that you invest in a business, it is called as a capital. So the capital of a bank is two types, right? One is a tier 1 and a tier 2. Tier 1 is referred as a core capital, tier 2 is referred as supplementary capital. And if you remember it correctly, I told you, tier 1 has more absorption capability. I said tier 1 can absorb the losses much more easily compared to tier 2. Right? Now, what is the basic idea for tier 1? Any example of this? We have discussed additional tier 1 bond and a tier 2 bond. Do you remember this? Additional tier 1 bond and a tier 2 bonds. Right? What is this idea of additional tier 1 bond and tier 2 bonds? Banks in India have been allowed to issue these bonds and raise capital. Right? And please read today's Hindu newspaper. Again, any other newspaper is okay. Right? In all the newspapers, this article is there. All of you have heard of Credit Suisse. All of you heard of Credit Suisse? UBS, in fact, yesterday also I mentioned this. UBS has offered to purchase a Credit Suisse. Some of you are saying no. My only concern is if you say no, then what are you reading? What are you reading? Are you so busy with your UPSC preparation that you don't even want to look as to what is happening in the economy? Right? I do not understand that. But it simply means you're not reading newspapers. It simply means you're not even reading newspapers. Okay. So Credit Suisse has been, right, or basically there's a proposal. Right? UBS, there is one more Swiss bank. UBS has agreed to take over Credit Suisse. Now please look at it. Credit Suisse has issued 81 bonds. Credit Suisse has issued 81 bonds. Right? And remember this, these are also called as COCOs. In today's Hindu newspaper, it is there, today's edition only. Right, that is 21st of March, right, 2023. There is this article in business paper. Please read that. These bonds, right, either additional tier 1 or tier 2 bonds are also referred as COCOs. COCOS. What do you mean by COCOs? Contingent convertibles. Contingent convertibles. Right, don't keep on asking me, sir, what is the long form of COCOs? Contingent convertibles. COCOs are basically contingent convertibles. Right, what is the meaning of the term contingent here? Contingent means there is a condition. I hope you understand this. Contingent means there is a condition. And when you reach that condition, these are referred as contingent convertibles. Is the logic okay? Let me know right now. When I'm discussing something else, don't throw this question at me. Right, contingent convertibles. These are referred as contingent convertibles. Why contingent convertibles? You have to reach a point, right, that is contingent. Once you reach the point, right, these becomes convertibles. Contingent convertibles. COCOs bonds are simply COCOs. Right, this Credit Suisse had issued huge amount of 81 bonds. The Credit Suisse had issued huge amount of 81 bonds. For example, yesterday we discussed Yes Bank issue. Same idea. Same idea. Even Yes Bank had issued huge amount of 81 bonds. Now, in case of Credit Suisse, these contingent convertibles have been written off. Meaning what? If you are an investor who has purchased 81 bonds of Credit Suisse, the value of the bond that you're holding right now is 0 rupees. Is it okay? The value of the bond that you're holding of Credit Suisse 81 bond, the value of that is 0 rupees. Right? Same as in Yes Bank. Same concept as in Yes Bank. Okay. So additional tier 1 bonds, tier 2 bonds. That is basically once you meet a particular point in the market, you will be allowed to write off additional tier 1 bonds if you have them, or tier 2 bonds if you have them. So will they always write off? Will a bank always write off? Not necessary. I hope you understand this. Not necessary. The bank may or may not write off these bonds. So I hope you understand. Risk is involved. Risk is involved. Of course, in many cases, in case of India, we have come across banks which are writing off these additional tier 1 bonds. Okay. Now that is one concept related to Basel guidelines. Okay. Right, that is basically the concept of the capital. So what do you mean by bond becomes convertible? Bond becomes convertible means a bond can be converted into other form of instrument. In fact, when I would have discussed the idea of, let's say, the financial market, I would have discussed this. But anyway, since you asked, what do you mean by bond becomes convertible? Whenever a bond becomes convertible, it simply means a bond can be converted into equity. I hope you understand. Bond can be converted into equity. These are called as convertible bonds. Idea of a convertible bonds. Right. So what is equity? Shares. Simple. Shares is nothing but equity. Now let me continue. Other basic concepts related to Basel guidelines. The risk that is faced by the bank. The bank facing risk. We generally have three types of risks which are faced by the bank. One is called as a credit, second one is a market, third one is operational. One is credit, second one is a market, third one is operational. Now, what do you mean by credit risk, market risk, and operational risk? Imagine you're a bank. I'm starting with the first one now. Imagine your bank. I've taken a loan from you. Right? Don't you expect the loan to be repaid by the customer? Simple. I've taken a loan from you. Don't you want the customer to repay the loan? Of course, yes. Right? Interest should be collected, principal should be collected, etc., etc. Now, what if I don't repay the loan? Just think of it. What if I don't repay the loan? Now, are you not facing certain risk of incurring losses there? If the borrowers do not repay the loan, is the lender facing a risk of incurring losses? Answer is yes. That risk is referred to as credit risk. That risk is referred to as a credit risk. The potential that the bank borrower will not make the payment. The borrower has taken the loan, will not repay it. So basically, in that context, the bank might face a risk of incurring losses. That is called as a credit risk. Now, basically, some of you are pointing out, like some of you are reminding me that, sir, but the bank has collateral. But yeah, it doesn't always work out like that. Let me give a very simple example. Imagine you take a housing loan. You take a housing loan. Right now, house value is 2 crore rupees. The bank will basically calculate 70% of it and give it in the form of loan that is 1.4 crore rupees. Agreed? Margin has to be maintained. Yesterday we have discussed this. Right? So 1.4 crore rupees will be given to you in the form of a loan. Now, let's say hypothetically, early morning, I'm not wishing bad on any one of you. Let's say hypothetically, you lose a job. The job that you had, you lost it. Market falls into recession. That goes into depression. And the real estate market also takes a hit. Now, the bank has given a loan of how much to you? 1.4 crore rupees. Tell me, early morning, don't make a mistake here. Tell me, if the bank sells off your house in the market, will they be able to get 1.4 crore rupees? Let me know. Right? Will the bank be able to get 1.4 crore rupees? Please understand the situation. Right? Today, not 2 people, but 1 person is saying yes. No, my dear, there is no guarantee. 2 more people. Right? There is no guarantee. Right? No guarantee that the bank will get same amount of 1.4 crore. Why? You know what is the value of the house today? Let me know. Can you estimate exactly what is the value of your house today? Absolutely no. Absolutely no. In certain situation, the market value will be very, very high. In certain situation, market value could be very, very low. Very, very low. There are so many factors which will have an impact on the price of the, right, let's say, commodity in the market. That is land here or a house here. So, but again, don't worry about all of this. Right? The bank will, or UPSC will not ask you to calculate it. But is it okay if I say the borrower, if they do not repay, the bank will incur a loss? So, any example in real life? SBI giving loans to Mr. Vijay Mallya. Has SBI incurred a loss or not? Let me know. Second one is a market risk. Second one is market risk. What is the market risk? The risk of losses arising from movement in the market prices. The risk arising from movement in the market prices. Now, what is this movement in the market? Why it might lead to the losses for the banks, etc. Right? Let's start with the example here. Imagine you're a bank. You have given a loan to me. You have given a loan to me, and right now the rate of interest is 6%. On the loan, you have given 6%. And so you're charging 6% rate of interest. On the other hand, you also collected deposits, and you're paying 4% rate of interest. You're paying 4% rate of interest to the depositor. Right? Now, simple question to all of you. When the market situation will change, so what do you mean by market situation? Imagine you're incurring more losses. Repo rate in the market has changed, etc. When the market situation changes, don't you think you should readjust these interest rates? Let me know. I'll repeat it again. On one side, you have given a loan, rate of interest is 6%. You also have collected deposit from a customer, you're paying 4% to the customer. When the market situation changes, that is RBI changes repo rate, right? Or you're collecting a lot of deposits, loans, you're not able to provide more, etc., etc. Should you not adjust these interest rates? You should adjust it, by the way. But what if you don't adjust it correctly? I hope you understand this. What if you don't adjust the interest rates correctly? Will it not affect your profitability? Rather than earning profit, can you incur losses here? I hope you understand. Rather than earning profit, can you incur losses here? Possibility is there or not? Of course, yes. Sir, how? How can you incur a loss here? There's a concept of net interest margin. There's this idea of net interest margin. What do you mean by net interest margin? I'll give a very simple example. Very simple example. Follow this carefully. Imagine the bank has collected 100 rupee in the form of deposit. Let's take only one number so that you can easily understand. A bank has collected 100 rupee deposit, and on this bank is offering 4% rate of interest. 4% rate of interest. And the bank is using the same 100 rupee to give the loan in the market, and the bank will charge, let's say, 6% rate of interest. Now, the difference between both these interest, the difference between both of these interests is called as an interest margin. It is referred to as interest margin. But what if the deposit collection of the banks will keep on increasing? People are not taking loans. Think of it. Can the bank incur a loss here? Of course, yes, there's a possibility. What if the bank is collecting deposits? A lot of deposits the bank is collecting, but the amount of loans they're able to issue, it is going down. So why are the people not taking loans? Let's say there is a recession in the market. You tell me. Let's say there is a depression in the market. Let's say there is a lockdown imposed by the government in the market. Is it not possible that loans issued by the banks will be affected during that period of time? But the deposits collected by the bank have increased. So when the deposit collected by the banks will keep on increasing, bank has to pay, right, 4%, but the bank is not able to issue loans and earn more money. Can it push the bank towards bankruptcy? Can it push the banks towards incurring losses like this? So there is a possibility. I'm not saying it has happened. I'm simply saying there is possibility, right? So can I say simply this is a market situation? Changes in the market can basically lead to bank incurring losses. Right? Again, sir, will the bank actually incur losses? No, there is a possibility. There is a possibility that if the bank doesn't take correct decisions, if the bank does not adjust the prices correctly based on the market situation, bank might incur loss. Okay. Third one, operational risk. Third one is operational risk. The Basel guideline simply says any risk which is not classified as a credit and market risk will be classified as operational risk. Is it okay? I'll repeat it again. Any risk which cannot be classified as a credit and a market risk will be classified as operational risk. So, any example of an operational risk? Any risk which leads to losses for a bank because of techniques or let's say technology, because of the people or the processes involved is called as an operational risk. I'll give a very simple example here. Imagine you go to a bank, you will provide a withdrawal slip or you'll give a check to withdraw, let's say 10,000 rupees. The cashier, rather than giving you 10,000 rupees, will count the currency notes wrongly and provide you 10,100 rupees. I hope you understand. The cashier makes a mistake and it happens, right? I hope you understand it happens, right? So cashier, while counting the currency notes, makes a mistake, gives you one extra note. So rather than giving you only 10,000 rupees, we'll give you 10,100 rupees. Can I call this 100 rupees as a loss to the bank? Can I call this as a loss to the bank? Now many of you simply say, sir, but the machine is there, etc., etc. Do you think all the branches in India have machines? Or else, sir, it is improbable, it will never happen. I'll give you one more example. Imagine, right? Imagine I'm the cashier. You will basically provide a lot of the currency notes, will deposit the money. I'll have to sit and count, or let's say I'll have to put it in a machine. What if one of the currency notes turns out to be fake currency note? One of the currency note turns out to be fake currency note, and I was not able to find out because the rush was there, or I was negligent, etc., etc. That fake currency note becomes a loss to the bank, right? So understand it happens. You might simply say, no, sir, it will not happen. Trust me, it happens. It happens, and if because this happens, that's the reason Basel has given it. So Basel says operational risk is also there for a bank, and this might lead to losses in a bank. Any problem with any one of them? One is the credit risk, second one is the market risk, third one is the operational risk. And because of any one of them or more than one of them, bank might incur a loss. Now, when the bank will incur a loss, you should have capital. All of you will agree? Right? The bank will incur a loss, so there should be certain capital of the bank to absorb the losses. Otherwise, the bank will not be able to operate. A bank will have to shut down. Right? So that's the reason. First, we have discussed the concept of the capital. Why the capital should be there? Because there's a risk. Bank might incur a loss. Let me go to the third one here. Risk-weighted asset, RWA. Risk-weighted asset, RWA. Now, what is this idea for risk-weighted assets? Any problem with the term assets here? Assets are nothing but loans, investments, advances that are given by a bank. I hope you remember this, right? Where have we discussed the assets and liabilities of a bank? When we were discussing cash reserve ratio. We had made a system, right? A classification of what is an asset, what is a liability, etc. So bank has a lot of assets. Now, let me give a very simple example. Imagine here is a bank. Bank has given loan to Government of India, and the same bank has given loan to, let's say, a company. How many of you think bank has taken the same risk by giving loan to both of them? Right? Have a look at this. I'll repeat the statement again. Bank has given loan to Government of India. Bank has given loan to a company. How many of you think that bank is taking the same amount of risk by giving loan to both of them? Of course, no. Can I simply say that bank giving loan to Government of India is very, very safe? It's very, very safe. Of course, in case of India, if you talk about in case of India, governments have taken multiple times loans from the banks, but never ever has the Government of India defaulted on the payment. Defaulted means you take a loan and you don't repay. That is called as a default. But on the other hand, have the companies defaulted? I hope you understand. Have the companies defaulted? Of course, yes. Best example, right? Kingfisher company. So you have situations wherein bank is giving loans, but now understand this: all the loans or assets do not carry same risk for the bank. All the loans or assets do not carry the same risk for the bank. Now, under the concept of Basel guidelines, I'll give you a calculation. Do not by heart the calculation. Please do not by heart the calculation. Trust me, UPSC will not ask you the calculation, but understand the concept. What I'm trying to show here is, imagine the bank has given 3 loans. Imagine the bank has given 3 loans. Loan 1, 2, and 3. And the loan value are 50,000, 30,000, and 20,000 respectively. Can I say that total assets held by the bank are 1 lakh rupees? Simple. In this example, total assets held by the bank are 1 lakh rupees. Point number 1. Point number 2. Now, imagine 50,000 rupees is given to Government of India. 50,000 rupees is given to Government of India. And because it is Government of India, absolutely no risk there. Right? So how much is the risk that you're going to face? 0% risk. Meaning what? You have given 50,000, you will get all the 50,000 back. You'll get all the 50,000 back. Right? So 50,000, all of it will be, right? You're sure you'll get it back. So risk-weighted asset in example 1 or loan 1 will be 0 rupees. Risk-weighted assets in case of the first one will be 0 rupees. Any problem? What about loan 2? Imagine loan 2 is given to a company. 30,000 rupees. Right? But there is a risk here. There's a danger that half of this amount you'll not be able to receive. Just hypothetical example. Half of this amount you'll not be able to receive. There's a risk there. So what I've done? 50% of 30,000 rupees is 15,000 rupees. And the third one, loan 3. Right? You've given, let's say, to real estate. You've given it to real estate. Right? And when you're given to real estate, the risk that you're taking will be much, much higher. Right? That is 16,000 is a risk-weighted asset. Now, who will decide these risk weightages? It is given under Basel guidelines. Should you by heart it? Please do not do that mistake. I hope you understand this is just a hypothetical example. Do not by heart this. UPSC will not ask you, sir, what if they ask? Check the last 10 years question paper. Because Basel 1 was introduced in 1988. I hope you understand. Basel 1 was introduced in 1988. Right? So do not worry about it. So risk weightages have been allocated. So what is the total risk-weighted assets here? What is the total risk-weighted assets in this example? The bank faces a total risk-weighted assets of 31,000 rupees. Sir, is this only the credit risk? No, it could be because of the credit risk. It could be because of the operational risk. It could be because of the market risk as well. Right? It could be because of the market risk. I've given you one example here. Banks will calculate risk-weighted assets in the context of the credit risk, in the context of the market as well as operational risk. Why? It's not that bank will incur a loss only because of the credit risk. Bank might incur a loss even because of the market risk as well as operational risk. Right? So this is how the risk-weighted assets are calculated. Now, once you calculate risk-weighted assets, what you need to do is the last concept for you. The bank has to maintain certain amount of capital now. I hope you understand this. Once you calculate what is your risk-weighted assets, the bank has to maintain certain minimum amount of capital. And the minimum amount of the capital, right, that is maintained by the banks is referred to as capital adequacy ratio. Capital adequacy ratio or capital to risk-weighted assets ratio. Right? Let's say, I'll take a simple example. In India, RBI says the commercial banks will have to maintain a capital adequacy ratio of 9%. Commercial banks, right, will have to maintain a capital adequacy ratio of 9%. What is the meaning of it? 9% is nothing but 9 upon 100. It simply means if a bank has a risk-weighted asset, I repeat, if the bank has a risk-weighted asset of 100 rupees, the capital that should be maintained by the bank should be equivalent to at least 9 rupees. I'll repeat it, understand it. Right? What is the side of a capital adequacy ratio? If a bank has a risk-weighted asset of 100 rupees, then the bank should maintain a capital of at least 9 rupees. At least 9. Right? Now, I hope you understand, because if the capital is higher, the absorption of the losses will be much, much higher. Even if the bank incur more loss, the bank has more capital to absorb the losses. Right? Now, I hope you understand. That is, sir, what I'm trying to say. If bank 1 has a capital adequacy ratio of, let's say, 9%, bank 2 has a capital adequacy ratio of, let's say, 15%. Can I say bank 2 is a better place to absorb losses compared to bank 1? Let me know, I'll repeat it. If bank 1 has a CAR of 9%, bank 2 has a CAR of 15%, B2 is better placed to absorb losses. Right? Because they have more capital as a percentage of their risk-weighted assets. So finally, what you need to understand is the idea of a CAR, capital adequacy ratio. That is, banks must maintain certain amount of capital, which they will use to absorb losses if they incur. Done? Can I go to the next now? Now, having understood all of this, let's have a look at the Basel guidelines. Have a look at the Basel guidelines now. The Basel is a place in Switzerland. Yesterday we have discussed this. Basel is a place in Switzerland. And in this particular place, that is a city, there is one bank by the name of Bank of International Settlement. India is a member of this bank. That is, Reserve Bank of India is a member within this bank. Now, the Bank for International Settlement has one committee by the name of Basel Committee on Banking Supervision, BCBS, Basel Committee on Banking Supervision. Now, this Basel Committee on Banking Supervision so far has announced 3 sets of guidelines. It has announced 3 sets of guidelines which are applicable to banking sector: Basel 1, Basel 2, and Basel 3. Right now, we are in the process of implementing Basel 3 guidelines. Let me start with Basel 1 here. Basel 1 was announced, implemented back in 1988. India has already implemented Basel 1 guidelines, and we were able to meet these guidelines by 1999. And we adopted Basel 1 guidelines in 1999. Now, what are the important provisions? Focus on 2 most important provisions. One, under Basel 1 guidelines, the document stated that every bank will face credit risk. How many types of risks we have discussed so far? 3 types. So, to begin with, Basel 1 said the bank will face only one risk, that is a credit risk. And because the bank faces a credit risk, there is a possibility of incurring losses. Hence, it recommended that all the banks should calculate risk-weighted assets and should maintain a capital adequacy ratio of 8% of RWA. Okay, 8% of RWA. Every bank should calculate what is their RWA and maintain at least 8% of their RWA in the form of capital adequacy ratio or credit to risk-weighted assets ratio, CAR or CRAR. This is Basel 1 guideline. But before going forward, focus on this point very carefully, because some of you will try to correct me when I discuss certain guidelines henceforth. Please understand this. Basel committee will give you a recommendation. RBI can change it. Is the point clear to all of you? Basel committee will give you a recommendation. RBI can change it. For example, in the Basel guidelines, they generally recommend a capital adequacy ratio of 8%. They recommend a capital adequacy ratio of 8%. But RBI says no, we will not maintain 8%. Rather, we will maintain 9%. Is it allowed? Of course, yes. Individually, the central bankers can change these guidelines as per their suitability, as per their applicability in the respective countries. So do not be confused. I've written 9% in the next slide, but some of you say, sir, in that document, sir, I read there, sir, I saw here, it was 8%. Basel says 8%. RBI says we will keep it at 9%. Done. So this is a Basel 1 guideline. Now, Basel 2 guidelines introduced in 2004. Now Basel says not 1 but 3 risks. Right? There are not 1 but 3 risks which can lead to, or which may lead to, losses incurred by the bank. What are the 3 risks here? One is a credit risk, second one is a market risk, and the third one is operational risk. So you can face not just one, that is a credit risk as mentioned in the Basel 1 guideline. You might face three risks, and as a result of which you might incur losses. Now, what you should do for this? What should you do for all of this? You should maintain 3 pillars, or you should implement 3 pillars. What are the 3 pillars? One is a capital adequacy ratio. CAR. What is the capital adequacy ratio? The minimum amount of a capital that the bank must maintain. I hope you understand. The minimum amount of the capital that the bank must maintain in order to absorb losses. Now, don't you think if you absorb losses, you'll be able to cater to the demands or the requirements of depositors as well as borrowers, or let's say creditors? Right? If you are able to run the bank, you're not shutting the bank down, you're able to run the bank, you're able to allow for the depositors to withdraw money, you're able to repay the loan of, right, let's say RBI, etc. That is basically in order to ensure the bank is up and running. Right? So, capital adequacy ratio, CAR. The banks are supposed to maintain a minimum capital adequacy requirement of 8% of risk-weighted assets. In case of India, it is 9%. Again, is it uniformly 9% for everyone in India? No. I hope you understand. Is it uniform of 9% for every bank in India? How many of you think you should have a uniform capital adequacy ratio of 9% in India? Let me see. Let me just check, right, how you think. Right? Do you think it is better to have a uniform 9% rate for everyone in India? No, it should not be uniform. It doesn't make sense. It should not be uniform. That's the reason RBI says, if you're a public sector bank, capital adequacy ratio is 12% for you. If you're any other scheduled commercial bank, CAR is 9% for you. If you're a payment bank, we have not discussed payment bank, we'll cover it later, don't worry. If you're a payment bank, then the CAR is 15% for you. So from one bank to another bank, the capital adequacy ratio will keep on changing. Okay. Second one is supervisory review. Right? What do you mean by supervisory review? The banks will have to develop certain technologies or better management skills in order to take care of or minimize the risk that they are facing. Is it okay? I'll repeat it again. What is the meaning of supervisory ratio or supervisory review? Supervisory review simply means banks must develop techniques. Banks must develop better methodologies in order to minimize, track and minimize the impact of the risk that they are taking. Right? That is called as a supervisory review. Third one, market discipline. Third one is market discipline. What do you mean by market discipline? Whatever the banks are doing in terms of, let's say, issuing AT1 bonds, in terms of writing of AT1 bonds, in terms of issuing shares in the market, whatever they're doing, they will have to keep RBI informed. That is, all the banks will have to provide the relevant information to the central banker or the regulator as to what they're doing under the Basel guidelines. Okay, so this is called as a market discipline. And these 3 pillars, that is a CAR, supervisory review, as well as a market discipline, these are called as a 3 pillars or 3-pillar approach under Basel 2. Now let me go to the Basel 3 here. Let me go to Basel 3. Was introduced in 2010. It has continued with the 3-pillar approach. Remember this. It has continued with the 3-pillar approach. What is the 3-pillar approach? Just now we have finished it. Right? One is a capital adequacy ratio. Second one is a market discipline. Third one is supervisory review. So what is market discipline? It simply means keep on reporting the data to RBI. I have kept on telling you this. Many of you keep on wondering, how does RBI know what a bank is doing? How does RBI know? Because you will have to keep on reporting the data to Reserve Bank of India. Right? So even under the market discipline, it says whatever you are doing. Right? For example, you are issuing additional tier 1 bond. Should you not inform RBI? You are writing off additional tier 1 bond. Will you not inform the regulator of the banking sector? You are issuing shares in the market to collect under tier 1 capital. Will you not inform RBI? Answer is, of course, yes. Right? So the argument is, under the concept of the market discipline, you keep on reporting the data to Reserve Bank of India. Okay, so Basel 3 has continued 3-pillar approach. Under this, capital adequacy ratio is 9%. But look at this now. Tier 1 capital should be at least 7%. Please buy hard this. My recommendation, buy hard this. Why? Thanks to banking sector crisis which is happening in USA, UK, Switzerland now, all these become relevant. So capital adequacy ratio is 9%. Out of this, tier 1 capital should be at least 7%. So why are we focused on tier 1 capital? You tell me between tier 1 and tier 2, which is better in absorbing losses. Let me know. As a bank, you should be reliant on which type of capital to absorb losses. It will be tier 1. So that's the reason we have higher requirement of tier 1 capital. Higher requirement of tier 1 capital. So at least 7% should be tier 1. Second, capital conservation buffer. CCB, capital conservation buffer. Now what is this capital conservation buffer? Have a look at this. The banks must keep additional capital which is equivalent to 2.5% of RWA. Now let me give you a parallel example. Then we'll come back to this. And the example that I tell you right now, I hope you understand. Example that I tell you right now, do not write in the exam. Now how many of you will keep certain amount of money in a secret compartment in the purse? Think of it, right? Many of you will take certain amount of money, let's say 500 rupees or 2000 rupees. You'll fold it like this, right? A compact folding, and there is a secret compartment in the purse. You'll keep it. Let me ask you the question. Why? Let me ask you the question. Why do you keep it? Your argument will be, sir, someday I might simply run out of money. I will open the purse, nothing is there. There's an emergency. I need to pay money, but I don't have the money. I've forgotten. Then I'll simply put my hand in the secret compartment, take it out. One example. I'll give you a second example. You look at your household. You're doing this, right? In your house, please ask your mother. There will be one dabba, right? One box or a sari, etc. That is a secret hiding place. And if you ask them, right, why do you keep it? Why do you keep like that? Your mother will say, what if there's a sudden emergency? What if suddenly money is required and none of you have any money? Right? In that case, I should have certain amount. Apply the same logic to a bank now. Apply the same logic to a bank. During normal times, you maintain capital adequacy ratio of 9%. But what if there is an emergency in the banking? That is, just to extrapolate here, It will not happen, just to extrapolate. What if the banking crisis that is happening in, let's say, USA will spread and the banks in India will start incurring more and more losses? Is the logic okay? Right? The banks in India start to incur more and more losses. In that case, don't you think, apart from 9% CAR, bank should also maintain certain additional amount of capital? Because there is an emergency now. Is the logic okay with all of you? At least now the logic is okay? Right? Many of you have started asking me, sir, why there is a buffer here? Already there is a 9%. Why there is a buffer in that case? The buffer is there in order to ensure that bank will have more money if there is emergency. The bank will have additional capital to absorb more losses that could happen in an emergency situation. This buffer is called as capital conservation buffer. Any difficulty? Can I go to the next one here? Right? Any difficulty? And one of the students says, sir, yes sir, my mother was hiding a lot of money and during demonetization, all these hiding places were revealed. Of course, yes, it happened to many of the households in India. Okay, so capital conservation buffer should be maintained. Now look at the next point carefully. Next point is important, slightly technical, but once you look at it, you will realize it. Can I say that under Basel III, CAR is 9%? Under Basel III, CAR is 9%. But the total capital requirements is 11.5%. Any difficulty? Total capital requirements is 11.5%. Sir, how? 9% CAR plus 2.5% capital conservation buffer. 11.5%. All of you agree? That's why I'm explaining this. Many of the newspapers will simply say capital requirements under Basel III are 11.5%. Now you'll be confused. You'll say, but that fellow early morning, I woke up at 6 a.m. That fellow told me it is 9%. But this newspaper says 11.5%. Right? Who is wrong? Many of you will simply conclude that fellow itself is wrong. The one who comes early morning to disturb my sleep, that fellow is wrong. Right? So no. Right? They're looking at a different angle here. Capital adequacy ratio is 9 and capital requirements are including 2.5, 11.5%. Okay. Now next one is liquidity coverage ratio. Even this was there in the newspapers now. Liquidity coverage ratio. What is this liquidity coverage ratio? Imagine you're running a bank. Okay, you own a bank. Now don't you think month to month basis there will be outflow of money from your bank? Let me know if you disagree. Let's say in the month of January there is outflow of money. Month of February there is outflow of money. Month of March there is outflow of money. Now let me give you a very simple example. Imagine today you have with you 100 crore rupee cash. I hope you understand. With you have 100 crore rupee cash. The depositors will come and they want to withdraw 120 crore rupee cash. Is it possible? Right, now look at the situation. How much money you have? Money. You have a cash of 100 crore rupees. Depositors have come to you and they want to withdraw 120 crore rupees. How can you give 120 crore with 100 crore rupees? Right, it's not possible. So this might lead to a bank run. Are you people reading the newspaper regarding the term bank run? This might basically snowball into a bank run. What is the meaning of a bank run? Continuously deposits will be withdrawn. I hope you understand. Continuously deposits will be withdrawn. Right? Why? Because the people are concerned about the bank. People are concerned about bank. For example, in the context of Silicon Valley Bank, what do you think happened? Right? What do you think happened? Same thing. Right? There was certain articles regarding the health of the bank. Right? There were certain issues with the financials of the bank. Depositors, one after the other, went to the bank and started withdrawing money. And when you keep on withdrawing money from the bank, they may not have the right amount of cash to pay you back. That is called as a bank run. That situation is called as bank run. Okay. Now, what is the solution to this? What is the solution to this? Under Basel III, there is a term called as liquidity coverage ratio. LCR, liquidity coverage ratio. Now, the liquidity coverage ratio is basically, understand the next one carefully, is maintained in the form of high quality liquid assets. It is maintained in the form of high quality liquid assets. HQLA, high quality liquid asset. Now, what is the meaning of the high quality liquid assets here? Any asset that you are holding as a bank. Any asset that you're holding in the bank, which can be quickly converted into money. Is it okay? Right? What do you mean by high quality liquid asset? Look at the term liquid asset here. Any asset that a bank is holding, which can be converted very easily, very quickly into money. And why this? Right? The liquid assets should be maintained. If the depositors start withdrawing money, if the people will start to withdraw the money, sufficient cash should be there with the bank. So that is the reason. Have a look at this. Under Basel III guidelines, the banks are supposed to estimate. Underline the term estimate. Right? The banks are supposed to estimate in the next 30 days how much money will flow out of the bank. And equivalent to that, is it okay? I'll repeat it again. The bank is supposed to estimate in the next 30 days how much money will be withdrawn from the bank. Equivalent amount of that. That is 100% of that. They will have to keep it in the form of high quality liquid asset. For example, let's take a simple example. You are running a bank and you know that in the next 1 month, next 30 days, there could be withdrawal of 100 crore rupees. There could be withdrawal of 100 crore rupees. Now you'll have to keep high quality liquid assets is equal to 100 crore rupees. Is the logic okay with all of you? Let me know. I'm not talking about the cash that is there with the banks. No, that they will do to conduct day-to-day transactions. But apart from that, the bank should also maintain at least 100% of next 30 days outflow of money from the bank in the form of high quality liquid asset. Why? Imagine this is a situation. Imagine this is a situation that is you're having 100 crore rupee cash, but the depositors want to withdraw 120 crore rupees. Now, whatever you have under the LCR liquidity coverage ratio, for example, government bonds. First example, government bonds, sell them in the market, raise money, and allow the depositors to withdraw. Allow the depositors to withdraw. This is the concept of liquidity coverage ratio. Any problem? Please do let me know. Any problem? So the bank maintains SLR. Why need of capital adequacy ratio? How many of you think SLR can be used to absorb losses? Let me know. Think of it. SLR is not bank's own money. Is the logic okay with all of you? What do you mean by capital? Capital is bank's own money. Right? The bank has its own money, not depositors' money, bank's own money. Right? For example, they will issue bond, collect money. That is bank's own money. They have issued shares. They will collect money. That is bank's own money. Capital. SLR is depositors' money. I hope you understand. SLR is depositors' money. How do you think banks maintain SLR? How do you think banks are maintaining SLR? They will take part of the deposits, right, which are done by you, and they will maintain in the form of SLR. Right? So that's the reason. Please be very careful here. Okay. Right. So this is the concept of high quality liquid asset. Right. Any difficulty? These are Basel III guidelines. In India, we are implementing Basel III now. We're in the process of implementing Basel III guidelines. Can we go to the next one now? Right. So Basel 1, Basel 2, and Basel 3. Right. OCT, please. What is this OCT? I don't understand. Where have written OCT in the previous slide? Not written OCT anywhere. Okay. Liquidity coverage ratio. As a bank, estimate in the next 30 days. Next 30 days, how much money will flow out of your bank? Let's say 200 crore rupees. And understand this. If you know that the money that is flowing out of the bank is 200 crore rupees, then the high quality liquid assets that you're supposed to maintain should be at least equal to 200 crore rupees. Why? If there's a sudden outflow of money from the bank, you should have certain assets which you can simply sell it in the market, raise money, and use it to allow the depositors to withdraw money. That is the basic idea of the concept of the Basel III, that is liquidity coverage ratio. Okay. Now, let me go to the next one here. Non-performing asset. NPA, non-performing asset. Now, what is this idea of a non-performing asset? Now, just give me a second here. Just give me a second. Okay. Now, what is this concept of a non-performing asset? Let's start. A bank will issue loans. A bank will issue loans. Loans are nothing but assets. If the borrower repays the loan, understand this. If the borrower repays the loan, this is called as a standard asset. If the borrower repays the loan, this asset is called as standard asset. If the borrower doesn't repay the loan, if the borrower, that is the person who has taken the loan, doesn't repay the loan, then this is called as a non-performing asset. Any difficulty? You will take a loan from a bank, you will repay the loan, you will pay the loan back. That is called as a standard asset. You take a loan, but you do not repay the loan. That is called as a non-performing asset. So have a look at this. Loan repaid, standard. Loan is not repaid, then this is called as an NPA, non-performing asset. But after how many days will you decide this account or this loan is a non-performing asset? As per the technical definition, if the borrower doesn't repay the loan for 90 days, I repeat, if the borrower doesn't repay the loan for 90 days from the due date, then this is called as a NPA. So what is 90 days from the due date? Let's say hypothetically, on the 1st of January, you are supposed to make a loan payment. EMI. On the 1st of January, you are supposed to make a payment. Right? You did not make the loan, right? Loan payment to the bank. Now from the 1st of January, they will wait for next 90 days. They will wait for next 90 days. And after 90 days is over, now the bank will declare this loan as a non-performing asset. Is it okay? Right? The bank will wait for 90 days from the due date. And even after 90 days, you don't repay the loan. Now the bank will declare this asset as a non-performing asset. Right? So you repay standard. You don't repay for 90 days from the due date, then this becomes a non-performing asset. But in between both of those, there's a standard asset as well as being declared as an NPA. There is one more classification. Please remember this. Please remember this. What if, right? What if you have not repaid, but 90 days are not over? I hope you understand. 1st of January, you are supposed to repay. You did not pay the amount. So from this, after 90 days, they will declare this as NPA. But what will they do in the month of January then? Remaining days in January. What will the bank do in the remaining days of February? There is one more classification that is called as a special mention account. SMA. Special mention account. Special mention account, again, there are 3 categories. SMA 0, SMA 1, and SMA 2. Is it okay? Have a look at the slide here. SMA 0, SMA 1, and SMA 2. Special mention account 0, special mention account 1, special mention account 2. Now, imagine you have taken the loan. You are supposed to repay on 1st of January. If you repay, it will be counted as standard asset. But what if you don't repay? Then for the next 30 days, it will be classified as SMA 0. Now, even after the end of 30th day, you did not repay. Now, for the next 30 days, that is from the 31st day to 60th day, it will be classified as SMA 1. And even then, you don't repay. 60 days are over. From the 1st of January, 60 days are over. You did not repay it. Then from 61st day to 90th day, it will be classified as SMA 2. And after 90 days is over, even then you don't repay. Now the bank will classify this as non-performing asset. Non-performing asset. Now let's say again, I hope you understand this hypothetically. I know, right? So February 28 days are there. What if it's a leap year, etc., etc. Let's assume hypothetically, right? So 1st of January you have not repaid. Now the bank will declare this as an NPA on 1st of right, January, February, March. 90 days are over. So 1st of April. Then 1st of April, right? The bank will declare this asset as non-performing asset. Now what is the further classification in that? Non-performing assets are further divided into 3 types. One is called as a substandard. What do you mean by substandard? From the 1st of April, for the next 12 months, that is for the next 1 year, this account will be classified, this loan will be classified as substandard NPA. for the next 1 year after declaring as NPA. Now after 1 year, right, have a look at this. After 1 year, they will classify this as a doubtful asset. That is, let's say again, I'll just give a hypothetical example here. Imagine this is 1st April 2023. Imagine your loan has been declared as an NPA on 1st April 2023. So till 1st April 2024, it will remain as substandard. After that is after 1st April 2024, we will classify this as doubtful. And after 3 years are over, and that is a loan is classified as a doubtful, 3 years are over, then we will classify this as loss making. Then we'll simply classify this as loss making NPA. This is the classification of an NPA. Any issue, please do let me know now. Right, simple idea. You take a loan and you repay. Then it is not NPA, it is a standard asset. But if you take a loan, you don't repay for 90 days, then you'll be classified as an NPA, non-performing asset. And this account remains an NPA for 1 year, it is called as a substandard NPA. And after 1 year is over, for next 3 years, it will be classified as doubtful NPA. And right after 1 year here and 3 year in the second case, that is after 4th year. After the 4th year, this will be classified as loss making NPA. Any difficulty in this? My recommendation, by heart it. My recommendation is by heart it. So where should we use all of this? Right? Nowhere have I come across this. I will tell you the context. Many of the times, government has announced support to sectors. Is it okay? Many of the times, government has announced support to various sectors. For example, civil aviation sector. Very recently, ECLGS scheme. Have you heard of this? Emergency Credit Line Guarantee Scheme, ECLGS. Emergency Credit Line Guarantee Scheme, ECLGS. Under ECLGS, civil aviation was brought under this. But when you're covered in schemes like this, what kind of loan you should be having? Should we provide assistance to everyone? What if think of this? A company is there, has taken the loan from the bank, and it is a loss-making asset. Do you think Government of India should provide assistance to such a company? Think of it. Just think of it. Right? A company is there, it has taken a loan from a bank, and that loan has been classified as loss-making. Should the government provide assistance to such a company? No. Should the government ask the bank to provide assistance to such a company? No, because they have already almost guaranteed they are going to close now. But what if I say that loan account is a special mention account 0? What if I say the loan account is special mention account 1? No doubt the company has defaulted. I hope you understand. No doubt company has defaulted, but it could be because of the pandemic. Agreed? It could be because of lockdown imposed by the government. And there could be situations like this, right, which has led to the company defaulting on the repayment. Then the government generally covers those accounts which are there in the special mention account 0 and 1 under ECLGS, Emergency Credit Line Guarantee Scheme, ECLGS. Okay, so that's the reason this kind of a classification is required. Right, this kind of a classification is required. Okay, so this is basically the idea of a NPA. Okay, classification of NPA. Now, what will the bank do? I'll tell you. If account becomes an NPA, what can the bank do? Have patience. I will tell you. Okay, now, what are the causes of high NPAs? Why NPAs in India are higher? Look at the first two. Automatically you'll understand. What has happened because of the pandemic? At least in the last 2 to 3 years. What has happened because of the pandemic? Don't you think companies have taken the loans? They have machinery, but they are not able to supply more in domestic market as well as international market. The reason for this is pandemic. You want to supply the domestic market. Demand has gone down. People have lost jobs, etc., etc. Will it not contribute to NPAs? Think of it. Will it not contribute to increase in the NPAs? Right? So how it will contribute? Let's start. Here is a bank. Bank has given loan to a company. Company will produce the goods and services, sell them in the market, collect the money, and repay the loan. Will repay the loan. It's a very simple cycle. Bank will provide a loan. Company will produce goods, sell it, collect money, and repay the loan. But in the last 2 to 3 years, do you think all the companies have been able to sell more and more goods and services? Do you think companies are able to sell more and more? No. Lockdown was there. Right? The government imposed restrictions on the movement of the people. In the international market, now there's a concern that there's a recession which is going to happen in UK's market, in USA market, in the European market. So the argument is, when the company is unable to sell the goods or services, either in the domestic market or in the international market, don't you think the amount of money generated by the company will be affected? Company might incur a loss. And when the company will incur the loss, what about the repayment of the loan? Right? What about the repayment of the loan? Company will default on the repayment of the loan. So the idea is simple here. In the last many years, because of crisis in 2008, because of the pandemic, etc., there is an impact on the performance of the companies. That is, they are not able to sell whatever they have produced in the domestic market or in the international market, which is affecting their revenues, and they are defaulting on the repayment. Right? First and second. Third, please focus on this. Increasing number of willful defaults. Increasing number of willful defaults. What do you mean by willful defaulter here? You have borrowed money from the bank. You have a sufficient amount to pay back the loan, but you will default. I'll repeat it again. Understand this carefully. Right? You have money. Right? You have a lot of money. You have a lot of assets. You can easily repay the loan, but you will purposefully or intentionally will not repay the loan. Right? Such type of borrowers are referred to as willful defaulters. Any problem with the term willful defaulter? A borrower who has taken the loan, has the financial capacity to repay the loan, but purposefully with intention will not repay the loan. Right? That is called as a willful defaulter. Okay? So the number of willful defaulters in India in the last couple of years has been higher. It has been increasing, and that's a concern for the bank. Because if the borrowers are purposefully defaulting, it will lead to losses incurred by the bank. Right? So increasing number of willful defaulters. Now there is one more issue here. Inefficient functioning of debt recovery tribunals. Follow this very carefully. Inefficient functioning of debt recovery tribunal, DRT. Now again and again, many of you are asking me, sir, the collateral is there, security is there, etc., etc. I've told you, even if you have security or collateral, it's not easy that you will recollect all the amount. Right? For example, in case of Mr. Vijay Mallya, there is Kingfisher Company. The flights, that is aeroplanes, were kept as collateral. Trust me when I say this. SBI has found it very difficult to sell off aeroplanes. The office was kept as a collateral. SBI found it very difficult to sell off office also. Right? So again, do not keep on throwing the same argument again and again. It doesn't make any sense. Right? Because you are expecting, you give a loan of 100 crore, collateral is 70 crore. You're expecting value of the collateral to be same all the times. Second, even if it remains same, when you sell it, what is the guarantee? Market will purchase it at 70 crore rupees. Right? So there is absolutely no guarantee. Do not keep on adding the same point. Okay, come back to this. Inefficient functioning of debt recovery tribunal. Now, what is this debt recovery tribunal? Follow this very carefully. I'll give you a classification now. Follow this very carefully. Here is a bank. Bank will give loan to, let's say, individual borrowers. I'm using the term individual borrower. Instead of individual borrower, they will use the term retail borrower. Retail borrower. Then the bank will also provide loans to companies. The bank will provide loans to companies as well. Now, what if this individual borrower doesn't repay the loan? What if the retail borrower who has taken the loan doesn't repay it? In such cases, bank will approach debt recovery tribunal. Is it okay? In such cases, the bank will approach debt recovery tribunal, DBT. A company has taken the loan. It will not repay the loan. In such cases, a bank will approach NCLT, National Company Law Tribunal. Long form is there in the subsequent slide. Have patience. You will come across the long form. Right, sir? Where it is there? Let me show you. National Company Law Tribunal, NCLT, National Company Law Tribunal. Okay, now come back to this. Bank has given loan to an individual. Individual doesn't repay it. Now the bank will file an application at debt recovery tribunal. The bank has given loan to a company. Company doesn't repay the loan. Now the bank will go to NCLT, file an application. We'll discuss this in some time. Focus on this now. Now we have established debt recovery tribunals. We have established debt recovery tribunals. But there's a problem with the DRT functioning. What is the problem? I'll give a very simple example. You answer to me. Imagine there are 5 judges. Will they be much more efficient in terms of clearing of the cases if the number of cases are 10 or if the number of cases are 10,000? Let me know. There are 5 judges. Will they be able to clear the cases much more easily in a quick time period when the number of cases are 10 or number of cases are 10,000? It should not be a very difficult question for you, right? Assuming everything else remains the same, the 5 judges will find it much more easier to clear 10 cases. Apply the same logic to DRT. Apply the same logic to debt recovery tribunal. We established a debt recovery tribunal and we wanted to clear the cases in 6 months. Within 6 months, we wanted to clear all these cases. But what has happened over a period of time is the number of applications filed by the bank, whenever the retail borrowers have defaulted has increased. The cases which have been filed have kept on piling up, kept on increasing. But on the other side, infrastructure has not changed at the same pace. The infrastructure has not increased at the same pace. So what do you think will happen? The applications will be pending for a very, very long duration. You filed application, let's say you're a bank, you filed an application in 2022. The DRT will take it up in 2023, will clear it in 2025. So don't you think the functioning of the DRTs is inefficient here? Is it okay? The functioning of the DRTs, it is inefficient. And sir, don't say, sir, why is the government not changing the system, etc., etc. Please understand, is it not the same situation in every level of judiciary? Let me know. Is it not the same situation at every level of judiciary? For example, I'm pretty sure all of you know this, right? Crores of cases are pending at district level court, right? Let's say at high court level, Supreme Court level, put together, crores of cases are pending. Don't you think government knows it? Right? So don't put an argument, sir, why government is not doing anything, right? It is the same situation in every level of judiciary. Okay, done. Now, what are the causes of high NPAs? Last one, governance issues. Governance issues. Many of you are throwing numbers here and there. Don't worry, don't worry. Number of cases which are pending are very, very high. Very, very high. At every level, it is very, very high. Okay. Now, come to the last one here, governance issue. What do you mean by governance issue? Imagine you have been given, right, the project to develop a road. Right, there is a need to construct a road. You have started constructing the road. Some of the people whose land you have acquired, they will go to court. Simple. They will go to court and file a case against you. Possible, of course. Yes. Right, so remember this. I'll keep on reiterating this point. Remember this. Land acquisition is very, very difficult in India. Land acquisition is very, very difficult. It's not that easy in India. It's very, very difficult. Can I give you examples in the current affairs? Bullet train project. Bullet train project. Right. Initially, the bullet train project was supposed to start from 2023, and this was there a couple of weeks ago in the newspaper, by the way. In Hindu itself, it was there. Bullet train project was supposed to start operating from 2023. What is the deadline now? Right. What is the deadline here now for bullet train project? The minister says 2026 now. One of the issues has been acquiring land. And by the way, there is a reason why I'm giving you the example of bullet train project. The premier of Japan is there in India. Have you read it or not? You should have read it, right? Premier of Japan is there in India. Prime Minister of Japan is there in India. And yesterday, right, Pani Puri diplomacy, right? So you'll see in today's newspaper, Prime Minister as well as the Prime Minister of Japan, they're eating Pani Puri. Again, will it be asked in UPSC? Absolutely no. Absolutely no. Don't worry about it. They're eating Pani Puri, but that is not important. Japan is giving a loan to India to develop bullet train project. Right, to develop the bullet train project, more than 1 lakh crore rupees the expenses. Right, the project cost is more than 1 lakh crore, and that loan is coming from Japan. The 4th part of the loan has been approved. That is there in today's newspaper. Please read that. I hope you understand. That is there in today's newspaper. Please read that. Okay, right. So have a look at this. Again, don't worry about Pani Puri. Which brand are they eating? Which aloo they are eating? Is it from West Bengal? Is it from this state? Don't worry. That is not at all relevant for UPSC. Not at all needed for UPSC. Okay. Now come to this. The argument that I was trying to make was you're constructing an infrastructure project. Some of the people will go to court and file a case against land acquisition. Now tell me, do you think the road construction will be completed? Is it possible? Do you think road construction will be allowed? Will it be completed? No. But you have finished half of the road. You have finished, let's say, half of the road. Now what will happen to the project here? Project will not be completed. Project will become NPA. Many of the times it has happened. Trust me, it has happened. In the case of bullet train project, I'll add one more current affairs point here. Bullet train project was supposed to pass through certain ecologically sensitive region. And again, from Hindu newspaper last month, it was supposed to pass through certain ecologically sensitive region. The court said, no, I will not allow you to destroy it. Reroute the project. Make a different route. Do not cross this region. It is ecologically sensitive region. Now tell me what will happen to cost of the project. Cost of the project automatically will go up because it is a government project. Somehow they will incur higher cost and complete it. What if private sector company is doing it? You are developing this project. Now suddenly the cost of the project goes up. You will realize you are going to incur losses. By constructing the project, you are going to incur losses. Will you complete the project? Of course no. Right. So argument is there are a lot of government issues here. What if judiciary intervention happens? What if one of the ministry will cancel the approval given to you, or one of the ministry will ask you to hold the project because they want to conduct a study, etc., etc., etc. All of this will basically add to the non-performing assets in the market. Okay, right. So these are some of the reasons why NPAs are increasing in the domestic market. Now, what if the NPAs are higher? What if NPAs will keep on increasing? First one, the bank's liquidity and profitability will be affected. Is the first one clear? It is self-explanatory. So how it is self-explanatory? What was the sequence? What was the sequence I told you? Bank will give loan to a company. Company will issue, right? So company will sell the goods or services, collect money, repay it to bank. Now what if this company is, right, not repaying the loan? Will it affect the profitability of the bank? Will it affect the money? Liquidity means money that is available for the bank, right? So will it affect the liquidity of the bank? Of course, yes. Okay, of course, yes. It will happen. Second one, it will also affect the number of loans, right? Number of loans which are issued by the bank. Of course, yes. The amount of loans that the bank will issue now, of course, the bank will be concerned about higher NPA. It might reduce the number of loans. Or even if they give loans now, in order to address the losses, in order to cover for the losses, they might charge a higher rate of interest. They might start charging higher rate of interest. What about investors? What about depositors? What about investors, etc.? You tell me. Will you keep your money in SVB bank now? Think of it. The best thing for me is that there is a crisis that is happening in the real time. And suddenly I can ask you a question, automatically you will give me the answer. Right? So one, will you keep your deposits in the SVB bank? And imagine they will come all the way to India, open a branch, and they will offer you 7% rate of interest. Right? SBI offers 3.5%, they will offer you 7%. Will you keep your deposits with SVB? Of course no. And let's say SVB has issued shares. Will you purchase the shares of SVB now? Again, answer is no. So depositor confidence, investor confidence will be eroded. Eroded means reduce. Right? Will come down. Cost of the credit will impact retail as well as industrial borrowers. That is, bank, I said, imagine has incurred a loss because of NPA. Now what the banks try to do is, they will try to keep the rate of interest to other borrowers slightly higher. Why? So that they will collect more interest, and whatever loss they have incurred earlier, they want to cover it. Now, if the banks will keep the rate of interest slightly higher, don't you think it will affect the borrowings of retail as well as the corporate borrowers? Will it not affect the borrowings? Answer is yes. Investment decisions of the industries can be put on hold. Bank is not giving a loan. Even if they give a loan, they are charging a higher rate of interest. The companies will simply hold various investment decisions. And finally, because the investment is coming down, banks' credit offtake is going down, it will have a limiting effect on the GDP of India. It will limit GDP growth rate of India. So these are certain effects of having high NPAs in the economy. Done? Right? So this is the discussion regarding what is the concept of NPA, why NPAs are increasing or high, and what will happen if NPAs are high. Now come to the next point. If NPAs are higher, what's the solution then? What is the way forward? What is the solution you have if NPAs are higher? The best example, the best solution for this is insolvency and bankruptcy code. I've used a short form here, IBC. Insolvency and bankruptcy code, right? IBC. Many of the newspapers when you're reading, or at least I hope you're reading, but based on many of your answers, I know you people are not reading newspapers. In short, this is called as insolvency and bankruptcy code. Don't ask me, sir, what is I and B? It is already there here. Insolvency and bankruptcy law or code. From the year 2016, we are implementing this law, right? What is the meaning of law? Government introduced the bill, passed it, made it as an act. Now we are implementing it. So IBC is under implementation now. What are the important points regarding IBC? Follow this carefully. Right, follow this. Point one, insolvency and bankruptcy code. It is a unified framework. It is a unified framework. Now, what do you mean by unified framework? There is only one law right now. Only one law right now. Okay, now, what is this unified framework? Why I'm writing unified framework in the context of IBC? Now, understand this carefully. Before IBC was implemented from 2016, we did not have only one law to handle insolvency cases in India. Does it make sense or not? Let me know. Before IBC was introduced from 2016, there were multiple laws which handled insolvency situations. What do you mean by multiple laws? We had certain provisions under Companies Act. We had certain provisions under NCLT Act. We had certain provisions for BIFR. There was a concept of Board of Industrial Financial Reconstruction. We had certain provisions under DRT, etc. So what was the situation before 2016? Multiple laws were there to handle insolvency cases. Now, what do you think is better? Having multiple laws for insolvency or having only one law for handling insolvency? Let me know. What do you think is better? Having multiple laws or having only one law? Don't you think having only one law makes more sense? I hope you understand. Right? To promote ease of doing business, to make it much more smoother, to cover everything, making one law and bringing all the provisions under it makes more sense. That's the reason I've written insolvency and bankruptcy code is nothing but a unified framework. It is a unified framework. Now, under this unified framework, what are the important provisions? Let's start. First one, we have established an authority, a regulatory authority. We have set up a regulatory authority. The name of the regulatory authority is Insolvency and Bankruptcy Board of India. In newspapers, you'll come across the acronym like this, IBBI, and they're referring to this, Insolvency and Bankruptcy Board of India. Now, right, focus on the example here. Do we have a regulator in banking sector or not? Let me know. Do we have a regulator in the banking sector? Yes. Do you have a regulator in insurance sector? Yes, right? You might have not heard of it, but answer is yes. Insurance Regulatory Development Authority. Do we have a regulator in pension sector? Again, yes. Pension Fund Regulatory Development Authority. So argument is in the same way, we are introducing a new system where multiple participants will be there. We will have one authority to regulate this system now. And the name of the authority is Insolvency and Bankruptcy Board of India. Now, second point, there is an insolvency resolution process which will be handled by a professional. Now, many of you ask me, sir, you are using the term insolvency so many times. What does it mean? Let's start with an example here. Here is a bank. Right? There's a bank. Bank has given loan to, let's say, a company. Now, the company will not repay the loan. It has been declared as NPA, non-performing asset. So now the question is, what should we do? I've declared the company account as an NPA, but what is the solution to this? You will take the company, that is as a lender. Now, you can decide whether the company should be sold to somebody else or should the company be closed. Both are different. Don't say one and the same. I'll repeat it. As a lender, as a creditor, now you will have to decide whether the company should be sold to somebody else in the market or company should be closed. So what do you mean by sold and closed? Imagine I'm the owner of the company now. I've taken the loan. I've not repaid it. So you can decide, can the company be sold to, let's say, Mr. Ratan Tata? Any argument here? I hope you understand the meaning of the term sold here. You will decide whether this can be sold to Mr. Ratan Tata. Of course, Mr. Ratan Tata should come forward and say, I want to buy the company. The company should come to you and say, I want to buy the company that is there under you. Okay, there should be a proposal first. That is selling. Second one is, imagine nobody wants to purchase the company. What is the solution then? You simply close the company. Closure of the company means we are going to remove employees. We are going to put a lock on the door. We are going to sell off the land. We are going to basically sell the machines, etc., etc., etc. That is closure of the company. Now you tell me, as a bank, or forget as a bank also, as a general economist now, which one is better? Which one do you think should be more? Which one is better? Being sold to somebody else or closing the company? Selling is always better. Remember this. And that is the objective. That is the objective under IBC. Right? Why, sir? Why selling is better? If you close the company, will you not remove employees from the company? Will it not add to unemployment? You will sell off the machineries. You will sell the land to somebody else. Right? Now what if they are supplying raw materials to another company? What if this company is important and is selling raw material to somebody else? Don't you think the other company will also suffer because you are closing the company here? I hope you understand. That's the reason the objective under IBC is preservation of the capital. Preservation means what? Protect. Preservation of the capital, not destruction of the capital. Is it okay? The objective under IBC, Insolvency and Bankruptcy Code, is not to shut down the companies. It is not to close the companies. Right? It's not to close the companies. Rather than using the term closure, they will use a technical term liquidation. Any difficulty? Let me know now. Rather than using the term closure of the company, they could simply use the term liquidation of the company. Liquidation means simply closing the company. And you tell me, you're reading the newspapers? Credit Suisse, is it being closed? Think of it. Credit Suisse, is it being closed? Of course no. They want to sell it. What about SVB? What SVB? Are they trying to close SVB? No, they want to sell it to somebody else. Right? In fact, the FIDC, Federal Insurance Depository Commission, FIDC, has stated that we will increase the window time period for which many other companies can offer to buy out SVB now. So argument is simple. Don't close. Closure, liquidation will lead to destruction of the capital. Will lead to removal of the employees. That is not good for the economy. Rather, sell off is good. You should sell it off to somebody else. And whenever you talk about selling off, we'll simply use the term insolvency resolution. Insolvency resolution. Okay, this is referred to as insolvency resolution. Now, is the term okay with all of you? Insolvency resolution process will be conducted by a professional now who is certified by IBPI, insolvency professional. Okay. Now, insolvency resolution process will be done in a time-bound manner. We'll be doing it in a stipulated time period. What is the stipulated time period? 330 days. The process of finding a buyer, deciding to sell it, the creditors approving it, etc., has to be done within 330 days now. There's a separate process for individuals as well as companies, but as of now, we have started with the company law tribunal. Right? We have started with corporate insolvency resolution process. CIRP is a part of IBC now. Okay. Now, what is the process? What is the process? How the sales will be conducted? Let's go step by step. Step number 1, either the lender or borrower will approach NCLT. Either the lender or the borrower will approach NCLT. Now, rather than using the term lender, can I use the term creditor here? Let me know. Rather than using the term lender, can I use the term creditor? And rather than borrower, can I use the term debtor? So, either the lender, that is the creditor, or the borrower or the debtor can approach NCLT, file an application. Right? So, the company, imagine I'm a company. I know my company is not performing very well. You have classified my account as an NPA. So, I can only directly go to NCLT, tell NCLT, I will not be able to repay the loan. Please conduct insolvency resolution. Possible? Of course, yes. It's possible. It's possible. Or else, I will not approach. You have given a loan to me. You will go to NCLT and file an application against my company, saying that here is a company. I have given the loan to them. They are not repaying. Please conduct insolvency resolution. Okay, so lender or borrower will approach NCLT, file an application. Now, this authority will appoint insolvency professional. The insolvency professional, IP is the insolvency professional, will form committee of creditors. What do you mean by committee of creditors? A company might have taken loan from multiple lenders in the market. Is it okay? A company has taken loan from, let's say, Bank 1, Bank 2, and Bank 3. Should you decide what should be done with the company? Think of it. Does it make sense? This company has taken loan from B1, B2, and B3. Right? Should only you decide what we should do with the company? Of course, no. We should form a committee of creditors. We should form group of creditors. Committee of creditors is nothing but group of creditors. So committee of creditors is made. Now this committee of creditors will decide, right, should we sell off the company or should we liquidate the company? I hope you understand. This committee will decide, should we sell the company or should we liquidate the company? Now before going forward, let me introduce one more technicality here. I said 3 banks have given loan to a company. All the 3 banks should be considered as creditors in the committee. But think of this carefully and answer it. Should all the 3 banks have equal voting right to decide it? I'll repeat the question here. All 3 have given a loan. So all 3 should of course must be included. You cannot give out one of them. But my next question is, if there are 3 banks, should all the 3 banks given equal voting right? Answer is no. You should not have equal voting right. Why, sir? Let me give a very simple example. Imagine B1 has given 1 crore rupee loan, B2 has given 100 crore rupee loan, and B3 has given 1000 crore rupee loan. You want to give equal voting right to all of them. Is it fair on B3? Think of it. Is it fair on B3? Right? So that's the reason whenever these kind of things are there, understand it is not based on number of creditors. It is based on total amount of exposure. It is based on total amount of loan or the debt they have given. Right? Why? Because they'll have to vote. I'll tell you. Right? You will simply come across a statement saying, if the majority of the creditors decide, they simply use a statement like this. If the majority of the creditors decide to sell it off, it will be sold off. Now have a look at this. Who is the majority of a creditor here? Can I say that B1 and B2 are majority of creditors? If you do that, is it not unfair to B3? Right? I hope it makes perfect sense to you people. If let's say B1 and B2, if you count these as majority of creditors, they will decide to liquidate the company. Imagine B1 and B2, they want liquidation of the company. Should we take B1 and B2 as majority of creditors and decide to liquidate? Is it not unfair to B3 here? That's the reason. It's not based on the number of creditors per se, but it is based on the value of the debt. It is based on the amount of exposure that the banks have to the borrower here. So please be very careful. These are technicalities. You don't make a mistake there. Okay, so insolvency professional will put a committee together. This is called as a committee of creditors. Now, committee of creditors will see if there are any proposals by other companies other businessmen in the market to purchase this company. Now, three of you are asking, sir, why will other companies purchase the company? I'll give a very simple example. Imagine you are manufacturing a particular product. Okay, you're manufacturing a particular product. Now, your supplier is going to be put under insolvency resolution. You are also thinking, should I expand my operation? I hope you understand. Should I expand my operation, right? Purchase one more company from which I will purchase raw material, so that raw material plus product I will only manufacture. Possible? Think of it. Right? Can a company do like this? Of course, yes. How many of you seen many companies, rather than purchasing raw material, they will only set up a manufacturing facility to manufacture raw material? How many of you seen companies which are involved in supply of the goods will set up their own logistics company to supply goods? Right? It makes perfect sense for the companies. So there are buyers in the market who are on the lookout, who are basically on the lookout to purchase such companies. So now committee of creditors will find out if there are any proposals. If there are any proposals in the market to purchase the company, if nobody is coming forward, if there is no one, then there is no option. They will have to liquidate. Now they will see if there are any proposals, any company which has offered a higher price. Obviously, the committee of creditors will decide to sell it to them. Is it okay? The committee will simply decide. Imagine company A has given the highest value for the company to purchase this. They've given a proposal. The value is highest. So obviously, committee of creditors will decide to sell it off to this company. So committee of creditors will deliberate, that is discuss and decide. And now this decision will be conveyed to NCLT. The decision of the committee of creditors will be conveyed to NCLT. Now some of you ask me, sir, what if there is no decision? What if committee of creditors do not arrive at any decision? In such a case, by default, we will liquidate the company. I will repeat it again. Right? In such cases, by default, we will liquidate the company. If there is nobody to purchase, or right, if there is no decision by the committee of creditors, we will simply decide, let's liquidate the company. Okay? Right? So this is how the bankruptcy or the insolvency, right? Bankruptcy and insolvency code now. Earlier it was bill, now it has become code. Right? So the insolvency and bankruptcy code will be used to liquidate, or let's say, conduct insolvency resolution for companies. Any difficulty in the process here? Any difficulty, please do let me know. Now, let me do the critical evaluation of this. That is more than 6 years are over now. 2016 we implemented, we are in 2023, right? More than 6 years are over. What has been the performance of IBC? What has been the performance? So what is IP? Insolvency professional. Insolvency professional. Insolvency professional, right, is an expert. Right? The person is an expert because you need to put together committee of creditors. And please understand the next point also. I'm getting into details now. This is not required for civil services, but because you're asking, I'm answering this. Imagine I've taken a loan from you. Just think of this. I'll ask a question by the way. Right? Imagine I've taken a loan from you. Right? I'm operating a company. Company has incurred a loss. I've not repaid the loan back to you. Now you'll go to NCLT. There is an insolvency professional who is appointed. Now how many of you think? Just think of this and answer. How many of you think I should be allowed to make decisions for the company? Let me know. I'm the owner of the company. Right? And my company has incurred losses. I've not repaid the loans to you. You have gone to NCLT now. Right? Now NCLT has taken up the case. How many of you think even after this, I should be allowed to make decisions for the company? Right? Does it make sense? Absolutely no. Right? Absolutely no. I should not be allowed to do that. I should not be allowed to do that. Right? Why? I am the decision maker and I've already taken decisions as a result of this company has incurred a loss. And already the case is there with NCLT. Should I allow to operate, take decisions for the company now? No. Now the decision making will be given to insolvency professional. I hope you understand. Now the insolvency professional will start taking the decisions, management of the company, not the earlier owner of the company. Right? But again, all these are very technical aspects of IBC. Right? I'm pretty sure you can refer to any number of books for UPSC. None of these books will discuss all of it. Okay, now this is basically the process. What has been the critical evaluation? I'll give you the break after this. Have patience. We'll take break after this. What has been the critical evaluation? What has been the advantage of IBC? One, it is a unified framework. All of you agree? It is a unified framework. It will make it much better to conduct business in India. Right? It will make it easier to conduct business in India. Any law which will promote right easier functioning in India for corporate sector or private sector, we can put it under ease of doing business. So one, unlike earlier situation, we have only one framework. Second, with this framework, it will become easier to conduct business. Third one, under this framework, we have a time-bound insolvency resolution system in the place. What is a time-bound insolvency resolution? As per the law. I'm laughing because I will go to the concerning part. Have patience. As per the law, we are supposed to finish off the process in 330 days. And many of the books will say 270 days, but please be very careful. Earlier it was 270, now it has been extended by 60 more days. Total time period under IBC now is 330 days. So we have a time-bound resolution process, right, put in place by the government. Compared to earlier situation, the time right now is much lower. So earlier, how much we used to take? As per various surveys, earlier, on an average, the insolvency resolution took around 4.3 years. I'll repeat it. As per the earlier process, different frameworks, etc. On an average, insolvency resolution time period earlier was 4.3 years. Which means you're a bank, you've given a loan to me, I've defaulted, you will drag me to NCLT earlier. This used to take more than 4 years on an average. So can you imagine to what extent the amount will be stuck up in the market? Right? Because until unless the company is sold, I hope you understand this. Have a look at this. Until unless the company is sold or liquidated, bank will not get the money. Is the argument okay with all of you? Until unless the company is sold to some other company or it is closed down, the bank will not be able to get any amount of money. Right? So imagine you've given 100 crore rupee loan to me, I've defaulted, I've not paid even a single rupee, and it takes 4 years to decide to sell it off to somebody else, which means for 4 years your 100 crore rupees stuck up. Is it not a problem? Is it not a problem for a bank? Of course, yes. And the problem will be compounded by the fact that it will be made much more complicated by the fact that once the case is accepted, you cannot even add interest. As a bank, understand this carefully. Right? Of course, all of this is very technical in nature. Once the case is accepted, you will not be allowed to calculate interest. You'll have to stop calculating interest. So if they take 4 years, can you imagine the amount of interest that you forego, the amount of funds that are stuck up in the system, etc. like this. So now it has been lowered, but again, there's a concern here. We'll come back to this. Don't worry. It has been lowered, right? That is one more advantage. It will provide the power to the creditors. I'll introduce a technical term now: secured or unsecured creditors. Now, what do you mean by secured creditors? What do you mean by unsecured? Let's start. You give a loan to me, I will provide a security to you. I'll repeat it. You give a loan to me, I will provide a security to you. These are called as secured loans. Yesterday also we have discussed this. What about unsecured loans? You give a loan to me, I will not provide any security. Now many of you will start typing, sir, any example of unsecured loans? Have you heard of NBFCs? Non-banking financial companies, NBFCs. Non-banking financial companies. Later there's a discussion. We'll have a discussion, don't worry. Have you heard of it at least? One of the special features of NBFCs is they provide risky loans. Remember this. One of the speciality of NBFCs is they provide risky loans. What do you mean by risky loans? You tell me. When you give a loan and you do not collect any collateral, is it a risky loan or not? Let me know. You give a loan, right? You're a lender. You give a loan, you do not collect any collateral. Is the loan risky or not? Of course, yes. Again, this is not the only example of a risky loan. There's a concept of a CIBIL score, risky borrower, etc., etc. We'll understand it later. Now, right, understand this. NBFCs will provide risky loans. They do not. Some of them do not take any, right? Let's say collateral. But there's a catch here. Right? Some of you are asking why will they do it? There's a catch. What is the catch? NBFCs will charge a higher rate of interest. NBFCs will charge a higher rate of interest. That's a basic idea. Higher the risk, higher is the rate of interest. Right? Can I give you one more example of unsecured creditor? Unsecured creditor. Can I give you one more example? Follow this example and let me know. Imagine you're a company. I will supply raw material to you. Okay? You're a company. I will supply raw material to you. Right? Have a look at this. When I supply raw material to you, you will not make the payment immediately. I hope you understand. Right? I'll supply raw material. Immediately, you will not make the payment. You will say, I will give you the payment after 60 days. I will give you the payment after 60 days. That is, you're asking for a credit period of 2 months. Imagine the cost of raw material is 2 lakh rupees. Is it as good as saying, I've given you a loan of 60 days. I've given you a loan of 2 lakh rupees for 60 days. Is it okay? Is this example okay with all of you? I'll repeat it again. Right? You're a company, I'll supply raw material worth 2 lakh rupees. You will not pay 2 lakh rupees today itself. You will take 60 days to pay that 2 lakh rupees. Now, is it as good as saying, I've given you a loan of 2 lakh rupees for 60 days? But look at the next one here. When I supply raw material to you, will you provide any collateral to me? I hope you understand. Will you provide any collateral, any security to me? No. Right? So can I call these also as unsecured lenders, unsecured creditors? Right? Now understand the importance of the law here. Understand the importance of law. Secured creditors anyways have collateral. What about unsecured creditors? Again, what used to happen? Understand this. If an unsecured creditor is there, like let's say raw material supplier, right? Imagine the same example. I've supplied raw material to you. You have said you will give the payment after 60 days. What if you don't give the payment? What if you don't give the payment? Right? I'll come to you, ask for a payment. You'll simply say not possible now. Give me 30 more days. I will go to the court. I will go to the civil court, file a complaint against you. Right? I will go to the civil court, file a complaint against you. And you know how efficiently the civil courts actually work in India. Okay, so there was a huge delay. There was a huge delay for all of it. Now what will happen? What will happen? This is the biggest advantage. Look at it. I'm a raw material supplier to you. You told me you will give the payment on 1st of April. If you don't give it, I will go to NCLT, file an application. Is there a danger of you losing the ownership of a company? Let me know. I'll repeat it again. You told me I'm a raw material supplier. You told me that on the 1st of April you'll make a payment. You do not make a payment. I will go to NCLT, file an application. Is there a danger that you will end up losing the ownership of the company? Answer is yes. Now, don't you think as a result of this, that because this could happen, there will be a behavioral change from the side of the borrowers? I'll repeat the statement. Right? Because this could happen, there will be a behavioral change from the side of the borrowers. That is, the borrowers will be worried about losing the ownership. So there will be a behavioral change. They will try to make the payment on time, right, every time. That is the basic idea, and that is the biggest advantage of IBC. Remember that. That's the biggest advantage. That's the biggest benefit that we have been able to derive out of it. And this can be asked in the form of mains question. This can be asked in the form of mains question. Please be very, very careful. Right? For example, sir, what kind of question can they ask? And look at the kind of a statement given here. With the implementation of insolvency and bankruptcy code, there has been a behavioral change from the borrower side or debtor side. Elaborate, they will say. And we'll keep on thinking, what does the behavioral change mean here? Are they dressing nicely now? Are they traveling in a nice car? Are they eating very sophisticatedly, etc., etc.? Behavioral change means until 2016, right, there was a huge delay in the process and they knew it. Borrowers actually knew it. Right? And they would simply say, go, you want to file a case? Go to civil court and file a case. Right? We will fight it out. But now what will happen? You will end up losing the ownership of the company. It can be sold to somebody else in the market. Right? So that is the behavioral change that I'm talking about here. Okay, and next one, consent. But before that, one of the students basically asked, is the voting right given to unsecured creditors? There is no uniform formula here. From one country to another country, the model will change. For example, in Britain, whether you're secured or unsecured, both of them will get the voting right. But in case of India, that voting right is given only for the secured creditors, not to unsecured creditors. Next, what are the concerns? Let me finish the concerns, then we'll take a break. First one, time taken for accepting and admitting applications is very high in India. What do you mean by this? Go back to the picture now. Go back to the process. The first step itself is getting delayed. This is the first step. What is the first step? You will go to the NCLT, file an application. And as per IBC, as per Insolvency and Bankruptcy Law, within 14 days, either the application must be accepted or rejected. I'll repeat it again. You will go to the IBC, you will go to the NCLT, file an application. Within 14 days, once the application is filed, in the next 14 days, the NCLT either has to accept the application or reject the application. Right? Here itself, there is a huge delay. I hope you understand. Here itself, there is a huge delay. And you tell me, if there's a huge delay at the first step itself, the whole process will get delayed or not? The whole process is getting delayed now. So why? Why is there a delay in the first step? Right? This is how the process is supposed to happen. You will go to NCLT, file an application. Now, NCLT will ask for information from one more authority. Have a look at this. You have given the application. There is one more authority from whom they will ask for information. That is called as information utility. But I repeat, NCLT will seek or ask for information from one more authority called as information utility. Now, because of all of this process, they will ask for data from here, right? The representatives from a bank will submit more data. They will argue here, right? Some of these borrowers, their representatives also there. They will also start arguing. So, because of all of this, the admission of the application itself is getting delayed. And because the step 1 is getting delayed, the whole process is also getting delayed. Point 1 in concern. Point 2, actual time taken for the resolution is much, much higher than 330 days. I repeat, actual time taken for resolution is much, much higher than 330 days. As per the law, it is supposed to be done in 330 days. But in reality, it is more than 330 days in majority of the cases. Now, you will ask me, sir, how is that possible? How is that possible? Right? Let me explain it. Imagine there are 4 lenders, secured, unsecured, don't worry, or 5 lenders, secured or unsecured. Now we have to decide whether the company has to be sold or liquidated. One of them will run to Bombay High Court, file a case against the company in the Bombay High Court. Simple. One of these lenders, either secured or unsecured, don't worry, will go to the Bombay High Court. Again, sir, why Bombay High Court? Can they file anywhere else? Of course, yes. Right? They can file in any high courts like this. They'll file an application or let's say case against the borrower, that is the company here. Now you tell me, if the Bombay High Court will take up a case against the company, which one will be given right priority? Should the case be taken first cleared, or the company will be sold first in the market? What do you think will be the priority now? Right? Some of you might simply say, sir, let's sell it off. You tell me, will you be interested in purchasing a company on which case is happening? Let me know. Right? Will you be interested in purchasing a company on whom there is a case pending in High Court? Of course, no. Now focus will get shifted in the Bombay High Court. Has it happened? I'm giving you real life examples. It has happened. It has actually happened. Right? And this is abuse of the system, misuse of the system. You'll ask me, sir, how? How there's abuse or misuse of the system? I'll give a very simple example. Imagine A is there. A is owned by, right, a very good friend, right, of the owner of the company, which is being kept under NCLT now. Think of it. The owner of A is a very, very good friend of the owner of the company itself. Right? Can they basically abuse the system? Is there a possibility of abusing the system or not here? Right? Of course, yes. Instances have happened. Multiple instances have happened because of this. Okay. So actual time taken for resolution is much, much higher. Most of the cases are going through liquidation. What was the most important objective of IBC? You tell me. What was the most important objective of IBC? Was it preservation or destruction? It was preservation. But what if, right? What if most of the cases are leading to closure of the companies? Is it not meaning that IBC is not performing very well then? We are not able to meet the central objective of insolvency and bankruptcy code. So most of the cases are going to liquidation. Now you'll ask me, why, sir? You tell me, when there's a recession, will the people be interested in buying new companies? Simple. You tell me, right? When there's a recession, when there's a concern over what will happen in the global economy, in the domestic market, etc., etc., do you think people will be, or let's say companies will be interested in purchasing more and more companies? You do not know what is going to happen after 6 months. Simple. You do not know what is going to happen in the next 6 months. Right? And that's the reason the buyers will basically step back. They'll not be interested. They'll simply say, let me see, let me wait for 6 more months. Right? So obviously there will be certain issues here. So most of the cases are going through liquidation. And finally, recovery rates. Recovery rates are also very, very low. Now what do you mean by recovery rates here? Imagine a bank has given loan to a company. Company will be sold to a buyer in the market. What if this buyer pays the amount, but this amount is just a fraction of the bank loan? Is it okay? Right? I hope you understand this. Bank is there. It has given, let's say, 100 crore rupee loan, or bank wants to collect 100 crore rupee from the company. What if the buyer will pay only 20 crore rupee to the company? Which means the bank is able to recover only 20% of its amount and not the 100%. And this actually happens. This actually happens, right? You should be very careful here. Nobody will pay 100 crore for the company. I hope you understand this. Nobody will pay 100 crore for this company. Will you pay 100 crore? I hope you understand. Will you pay 100 crore rupee for this company? If you're a buyer, you should not pay it. Why? If the value of the company is 100 crore, you can basically set up a new company. Why should you purchase this company? Think of it. Why should you purchase this company? Right? It's as simple as that. So you will purchase it at a very, very low prices. But does it not mean that bank is incurring a huge amount of losses here? In this asset sale, right, recovery rates are very, very low. Right? So recovery rates are very, very low. Done? Right? So these are some of the critical evaluation points regarding insolvency and bankruptcy code, IBC. Now before going to the current affairs, if you have any questions, ask it. Let me address them. Then we will take a break. Let me address questions, then we'll take a break. If company took loan from many banks, how will their voting right differ? And the recovery will be same? No. Voting rights will be different. I've already discussed this. Voting rights should be different. How should it be same? Right? Imagine 1,000 crore is the debt. Bank 1 has 100 crore out of it. Bank 1 needs to collect 100 crore. So the voting right for bank 1 will be 10%. So based on their exposure, voting rights will be provided. Okay. Can you discuss again the behavioral change? The behavioral change that I'm talking about here is, simply have a look at this. The borrowers now, that is the debtors, are concerned about the fact that under IBC, they might end up losing the ownership of the company. So they have become very prompt in terms of making repayments either to secured or unsecured creditors. That is the behavioral change. There is already IBPI, then why NCLT and DRT? IBPI is a regulator. You are asking me a question, if there is already Reserve Bank of India, why is there a State Bank of India? Do you think the function of Reserve Bank of India and State Bank of India are one and the same? Think of it. Right? One is a regulator, another one is a lender. In the same way, NCLT will conduct the process. But who is insolvency professional? Who should be certified as an insolvency professional? Who should ensure that all the people who are involved in the process are following a law? It is IBPI. Okay. Is Nirav Modi and Mallya willful defaulters? Yes, they have been classified as willful defaulters. Okay. If someone gives me SMA 2, then high interest rate is charged or same. If someone gives me in SMA 2, then high interest rates are charged the same. What is the context? You tell me the context. Okay. If IBC gives a decision, can the decision be overturned by courts? You can appeal. You can appeal. There is an appeal system. You can appeal against it. Okay. Time period for IBC as per the law, they're supposed to finish it in 330 days. RBI yesterday imposed a 2.27 crore penalty for RBI. Yes. I hope you understand. Yes, right. The Reserve Bank of India has imposed a penalty because certain guidelines which were implemented were not followed by RBL Bank. And the RBI is empowered under the RBI Act to impose penalties. First and second point, time taken for accepting and admitting the applications is longer than 14 days. Why? The NCLT is hearing from both the sides of the parties. One is a bank, another one is a company. Now they are hearing from both the sides of the parties. They are collecting information from one more authority called as information utility. All of this is a delay in the process. Actual time taken for resolution is higher because some of the creditors are going to court, filing cases in the court. And as a result of this, right, the whole process is getting delayed. In the committee of creditors, are they secured or unsecured? Again and again, I'm answering the same thing. I'm telling you there is no uniform model. For example, in Britain, both secured and unsecured are there given voting right. In India, unsecured are not given voting right. An individual lender approach NCLT. What do you mean by individual lender? You tell me what do you mean by individual lender first. Right? Can you act as an individual lender in the market? How so? You tell me that. Okay, done. So let's take a break now. Let's take a break. I'll restart at 8:20. I'll restart at 8:20. Okay, take a break. We'll restart at 8:20. Okay, welcome back. Am I audible? Please do let me know if I'm audible so that we can start. Okay, done. Let's start. So the next concept I want to discuss is the current affairs one. Please be very careful. National Asset Reconstruction Company Limited. NARCL, National Asset Reconstruction Company Limited. Now have a look at this. Let's start. Now before discussing NARCL, before understanding the concept of NARCL, let me start with a very simple concept. Asset Reconstruction Company. Asset Reconstruction Company. ARC, Asset Reconstruction Company. I'll start using a short form. Understand this now. What is an ARC? Right, understand this. Imagine here is a company. The company takes a loan from a bank. The company doesn't repay the loan, becomes an NPA. Now the bank can simply sell off or transfer the company into a new entity called as ARC. There is a new entity which is referred as ARC, Asset Reconstruction Companies. In fact, in case of India, there are around 28 ARCs. Not very well functioning, but there are around 28 ARCs. Now follow this very carefully. The bank has given the loan to a company. Company is not able to repay it. Now the assets of the company will be transferred to one more entity called as ARC. Sir, why? Why are we transferring these assets to ARCs? How many of you think the bank is an expert in selling the assets in the market? Let me know. Let's say land of the company or manufacturing facility of the company, etc. There are various assets which are collateral. The bank will simply transfer the company into the hands of the ARC. Why do they do that? Simple idea. Bank is not an expert in managing of these companies, selling of these assets, etc. So we have a specialist in the market by the name of Asset Reconstruction Companies. And what these ARCs used to do is, they would try to find a buyer, restructure the company or find a buyer in the market, sell it off in the market, collect money and pay the money back to the bank. Of course, they will impose and collect a certain amount of charges. Now many will simply say, sir, it is similar to IBC. It's similar to what is happening in the IBC. Understand this carefully. ARCs have been working in India for more than 2 decades. I hope you understand this. ARCs have been working in India for more than 2 decades. And I said there are more than 20 ARCs which are working. Now government of India has allowed the ARCs to function, but the efficiency of the ARCs is very, very poor. Right? I hope you understand why we shifted to a new model. Efficiency of the ARCs is very, very poor. Right? How do we define poor here? What if you're a bank and your recovery rate is 5% here? Do you think ARCs are working efficiently? Think of it. Your recovery rate is just 5%. Right? So argument was very simple here. Concept of ARC is not new in India. It's a very old concept. Right? From many years in India, RBI has allowed ARCs to operate, but the ARC's operation is not efficient. They are not able to generate sufficient amount of returns to the banks. That is the precise reason why we have introduced a new model, that is Insolvency and Bankruptcy Code, where the recovery rates are much better compared to ARCs. Is it okay? The recovery rates under IBC, again, right? Understand this. Some of you simply remind me, sir, but in earlier slide you wrote that recovery rates and IBC are lower, but now you're saying recovery rates are higher, right? You're contradicting yourself. My dear, earlier context was, if you've given a loan of 100 crore, that is, you're supposed to receive 100 crore, but you're receiving only 20 crore, I said recovery rate is 20%, which is lower, I said. But in this context, imagine this. Your recovery rate under ARC is 5%, but under IBC it is 20%. Can I say recovery rates in IBC are higher here? That is what I'm trying to tell you. Right? Most of you are involved in that only, sir. You said there, you said here, like this. Focus on the discussion. Context is important. So IBC recovery rates are much better. And that is the precise reason now the banks are preferring IBC to get the better recovery compared to ARCs. Done. So there was a model of ARC, not very efficient. Even though we had 28 ARCs, not a very efficient model, recovery rates are very low. And that is the precise reason why Government of India in 2016 introduced the Insolvency and Bankruptcy Code. This is point number 1. Point number 2, there is this idea of a bad bank. there is this idea of a bad bank. Right, now what is the meaning of the term bad bank? Right, let me start with an example. In the next slide you will see NARCL. In the next slide you will see NARCL. NARCL is an example of a bad bank. But let me explain what is a bad bank. Imagine there are 4 banks, B3 and B4, and all the 4 banks have certain NPAs. NPAs cannot be managed by all the banks. Right, all the 4 banks cannot manage these NPAs. So there is a proposal, and it's not new. It's been more than 2 decades that we are discussing the concept of a bad bank. There is a proposal that we should establish only one bank. Have a look at this. We should establish only one bank, and the NPAs of this bank, this as well as this, should be transferred to the one big bank that is a bad bank. Any difficulty here? Let me know. Right, in this example, imagine there are 4 banks in the economy. All the 4 banks have certain number of NPAs. The concern is that all these banks will not be efficiently be able to manage these NPAs. So there is a proposal that we should have only one bank which will take up or which will take away the bad loans or the NPAs from all of these banks, and now this bank will try to resolve all of these NPAs. And this bank will be referred as a bad bank. Right? Is it okay? Why it is referred as a bad bank? It is simply taking over the bad loans of all the other banks, hence called as a bad bank. Any difficulty, please do let me know now. I've discussed 2 concepts. One is a bad bank concept. Second one is the idea of a ARC. Right? We have ARCs working in India, not very efficient, hence we have shifted to IBC. We also have a concept of bad bank now, very, very recent model, not a very, very old model, very recent model. The idea of, right, the NARCL. Why will the transfer, my dear? Imagine you're a bank manager. Are you an expert in managing NPA? Right? Why is it so difficult? Are you an expert in managing NPA? Are you an expert in that? Absolutely no, you're not an expert. So the argument was, we'll set up one bank which is an expert in managing NPAs. Transfer all of your NPAs into that bank. That is a bad bank. Okay, done. What is ARC? Right, because as usual, 2 people are asking ARC. Asset reconstruction companies are basically companies. Right, look at the name itself and understand. These are registered under companies. What is the role of the ARC? They would take the assets from the banks, that is bad assets, NPAs from the banks, try to resolve them, right, try to sell it off, restructure, or right, liquidate, and give the amount back to the bank. And they would charge a certain amount of money for providing these services. Okay, now, what is the model that I'm trying to discuss here? The concept of NARCL, National Asset Reconstruction Company Limited. NARCL has been given the license by RBI. Now it is working as a type of a ARC, or let's say bad bank in India. Now, what is the basic idea? Follow this very carefully. Let's go step by step. First point, whenever you talk about bad bank in India, the name is simply NARCL, proposed by Government of India, Majority of the ownership in NARCL is owned by public sector banks. 51% of the ownership in NARCL is with the public sector bank, remaining is with the private sector. Second, what is this NARCL? What does it do? It will take away NPAs from the bank. Have patience, listen to the model first. It will take away, purchase the NPAs from the banks, try to sell it in the market. To one more entity called as IDRC and give the returns to the bank. Now, many of you will basically say, sir, we already have the concept of IBC. Then also, why is there a need for NARCL? Understand the difference here. There is already IBC. Then also, why do we need NARCL? The NARCL has been proposed to take care of those bad loans or those NPAs which are there in the banks for a very, very long duration. Is it okay? I'll repeat it again. I'll use a technical term, legacy NPA. Legacy NPA. What is the meaning of legacy NPA? Those NPAs which are there on the balance sheet of the bank for a very long duration. Again, the term long duration is not defined. It could be 5 years, it could be 6 years, it could be, right, let's say 3 years. So whenever NPAs are there in the balance sheet of a bank for a very long duration, it's very difficult for you to sell it through IBC now. It's very difficult. Why? If an account has remained NPA for, let's say, 5 years, how many of you think will be buyers for this under IBC? Right? Do you think IBC is the best model for it? Right? Of course, no. So that's the reason Government of India has proposed a new model to address the issue of legacy NPAs. And in fact, please understand, this was proposed back in 2021. Budget for 2021 by the government. It has started operating. Last month, first asset was taken by NARCL. It's been more than 6 to 8 months since the operation has started. Last month itself, one of the NPAs, that is JP Infratech, JP account was taken by NARCL. So argument is simple here. The banks have certain loans which are NPAs for very long duration. These are called as legacy NPAs. Now, Government of India says, I want even the legacy NPAs to be resolved through a new system called as NARCL, National Asset Reconstruction Company Limited. So follow this carefully. Banks have legacy NPAs. Now, these will be purchased by NARCL, but NARCL has one more authority. NARCL will not directly sell. NARCL has one more operational entity, that is IDRC. IDRC will try to find a buyer in the market or liquidate it, then transfer the money to the bank. This is how the system will work. I'll come back to this slide. Please have a look at it. Right, here is a bank. It will transfer the legacy NPA to NARCL. And now this NARCL has one more operational entity within NARCL. There is one more entity called as IDRC. IDRC will try to find a buyer in the market, sell it off, right? Whatever amount is realized, now it will be transferred from IDRC to NARCL, NARCL to the bank. Right? This is basically how the system is going to function under the concept of National Asset Reconstruction Company Limited. So 51% of NARCL will be owned by public sector banks, remaining from the private sector. But there's one more very important point. Government of India has provided a concept of contingent liabilities. Government of India has introduced the concept of contingent liabilities for a duration of 5 years, and the value of contingent liabilities is 30,600 crore rupees. What is this? Let me explain this. Follow this carefully. Slightly technical. Follow this carefully. Imagine the bank wants to sell a legacy NPA to NARCL, and NARCL says, based on the market, what is the valuation of the company, etc. NARCL will say to the bank, I will give you 20 crore rupees. Right? I'll sell it off in the market. I will give you 20 crore rupees. Okay. Now, IDRC will take over this company, that is for selling purposes. Imagine they'll find a buyer, they will sell it, but they're able to collect, let's say, 10 crore rupees. They're able to collect 10 crore rupees. Now, don't you think there's a problem here? What is the problem? NARCL has promised that it will pay 20 crore rupees for the asset, but by selling it in the market, they're able to get only 10 crore rupees in the market. What is the shortfall? What is the shortfall? 10 crore rupees is the shortfall. That is where Government of India has introduced a fund where Government of India says up to 30,600 crore rupees, I will make it available. Contingent, right? I'll make it available now, right? What is the importance of this 30,600 crore rupees? Imagine NARCL has offered something, right? It has basically told the bank, I'll pay you something for this asset, but NARCL has not been able to collect sufficient amount by selling it in the market. Then whatever is the shortfall, it will be used from this fund. Is it okay? Whatever is the shortfall, it will be used from this fund. For example, NARCL in this example has offered 20 crore, but it has collected only 10 crore rupees. So how much is the shortfall? 10 crore rupees is the shortfall. So from this fund, right, which is worth 30,600 crore rupees, 10 crore rupees will be utilized in addition to the existing 10 crore rupees. Now NARCL will totally pay 20 crore rupees right to the bank here. Done. This is the importance of this contingent fund. Look at the name, I've written it here, right? Contingent fund or contingent liabilities. Can you understand the term contingent here? Contingent means condition. Contingent simply means condition, right? And it's not always that the money from this fund will be utilized. It's not always. Why? What if I simply say NARCL has offered 20 crore and by selling it has collected 20 crore? Do you require money from the fund here? Do you require the money from the fund? Of course no. Of course no. You are not going to use the money from the fund. So argument is simple. 30,600 crore rupees has been kept for 5 years by Government of India. But the money from this will be used only when the NARCL is not able to recover this amount from the market. Only in such cases, only in such situations, right, this fund will be utilized. This is basically the contingent liabilities. Okay, right? So this has been introduced by Government of India. The bad bank will be taking over and resolving NPAs amounting to 2 lakh crore rupees. The total NPAs, legacy NPAs, old NPAs which are there with the bank, how much are we taking under this NARCL? 2 lakh crore rupees. We want to resolve NPAs to the extent of 2 lakh crore rupees. And government will be providing guarantees for the 5 years if NARCL is unable to repay the amount to the bank. Right? This is basically how NARCL will work. Now there's a technical term here. Sir, there is a term security receipt. What does it actually mean? Now, let me enter into the technicality. Follow this carefully. You are a bank and I'm the NARCL. Let's start. You are the bank and the NARCL. You want to dispose of one of the very old NPAs in your balance sheet. Legacy NPAs. So you will bring that legacy NPA to me. You will tell me that NPA, that basically a company. The company owes you 100 crore rupees. But right, I will simply say in the market nobody will purchase this at 100 crore rupees. There are no buyers. Nobody will purchase it. But even then I will try. I will try to resolve this company, but I will give you 20 crore rupees. I will not resolve. I will not give you 100 crore rupees because nobody will purchase it. I'll give you 20 crore rupees. This is the valuation of the company. Now understand the next step here. As per the guidelines right now, the value of 20 crores will be divided into two parts, 15% and 85%. 15% and 85%. The 15% has to be paid upfront by the ARC. And the same is applicable to asset reconstruction companies as well, because NARCL is an ARC. Okay. So 15% of the amount has to be paid upfront by the ARC. Right. So 15% of 20 crore will be how much? 3 crore rupees. So 3 crore will be paid by NARCL to the bank. What about remaining 85%? That is 17 crore rupees. What about the remaining 17 crore rupees? The NARCL will issue instrument by the name of security receipt. Is it okay? NARCL will issue an instrument in the name of security receipt. Meaning what? Until unless I sell this in the market, keep certain guarantee from me. Take an instrument which offers you 17 crore rupees, keep it with you. Let me sell this asset in the market, get the money, I will give you the money and you can give me the paper like this. That is basically how asset reconstruction, right, companies will work. This is how ARCs are supposed to work. 15% will be upfront and remaining 85% will be in the form of security receipt. Now I said that, what if NARCL, which has offered 20 crore rupees for the asset, will not be able to generate 20 crore, it has generated only 10 crore. Do you think security receipts can be honored by NARCL here? Do you think the SRs, that is security receipts, can be honored by the NARCL? Of course no. Right? It's not possible. Why? You have a security receipt worth 17 crore rupees. How can you pay 17 crore with 10 crore rupees? So obviously no. That's a precise reason. Now Government of India will provide the remaining amount from the contingent liabilities. Okay. This is how the NARCL system is supposed to work. National Asset Reconstruction Company Limited. It is supposed to work like this. Okay. Done. Right. Very, very novel concept. But again, like I've told you, very novel concept announced, has been operating for more than 6 to 8 months in India. But last month itself, it has been able to purchase their first asset. In the last month itself, they have been able to purchase their first asset. So you will have to wait and see whether it is operating efficiently or not, because first asset has been purchased last month. I hope you understand what I'm trying to say here. Okay. What are the positive aspects related to this? Right? What are the positive aspects related to this? So why can't we use IBC? But again and again, I'm repeating the same thing. These are legacy NPAs. If you are a bank, imagine a company has taken the loan from you and it has become an NPA for 4 or 5 years. Will you be able to take it to IBC now? Think of it. Just think of it. Right? No, you would prefer a legacy mechanism such as NARCL. Again, the term legacy NPAs has been politically charged. Do not worry about it. Right? I'll tell you why. The current government, again, whatever your political orientation is, I generally don't discuss political issues, but you will not listen to me, whatever I say. Right? The current government says the NPA mess that is faced by the banks today are the result of the policies of the past government. And again, I hope you understand who are they targeting. Hence, they will use the term legacy NPA there, right? Because their government created NPAs, will call them as a legacy NPAs. It is their legacy, they will say. But you don't call it like that. You don't write it like that. Be always neutral when you write economic answers. Whatever you write in your polity paper, whatever you say in your interview, that will represent your ideology. But when you talk about economics, always have a neutral stance. For example, sir, what do you mean by that? You tell me whatever policies I've discussed, either of the past government or the current government, did we not cover all the angles related to that? That is, what are they trying to achieve? Have they achieved it? If no, what is the way forward? Follow that. Simply follow that. Okay, now come to this. NARCL, National Asset Reconstruction Company Limited. What are the good aspects related to this? One, the stress assets will be parked in only one entity. Bad bank is there. You will transfer all of them to the bad bank. You don't worry. Bad bank will take care of it. Okay, that is the first one. Now you tell me, from your balance sheet, if NPAs are removed, I repeat, from your balance sheet, if NPAs are removed, will the health of the balance sheet improve or not? Is it okay? I'll repeat the statement here again. Right? From your balance sheet, you remove the NPAs, will the health of the balance sheet improve or not? Of course, yes, it will improve. Now, can you show this improved balance sheet to the investors and raise money from the market? Possible? I hope you understand the logic here, right? Yes. The banks can now focus on their core activities, that is mobilization of the deposits as well as lending, and the banks will also find it easier, right? It is easier, right, basically now to raise funds from the market. Because the balance sheet, of course, as an investor, you should look into balance sheet, right? Because if the balance sheet is, right, having a lot of NPAs, it simply means the bank might incur a loss anytime now. Would you be interested in investing in such banks? Of course, no. Right, and the next one, initially to begin with, the NARCL will be focused on large value banks. I repeat, initially to begin with, the NARCL will be focused on large value of the loans which have become NPAs in the banks. Why? You should clear larger value loans first, then focus on small value loans. For example, right, think of it and give me an answer. For example, is it good that you clear 10 NPAs of 10 NPAs of 1 crore each, or you clear 1 NPA whose value is 500 crores? You tell me which is better. Is the logic okay? Does it make sense or not? You should target larger value loans, clear them first, then focus on smaller value loans. That is what exactly we are trying to do here. First, we'll target large value loans, then we'll target smaller value loans. Okay? So these are some of the advantages. But what are the concerns? What are the issues here? One, it is a very important reform. Don't get me wrong. It's a very good reform. But this reform will address the problem. I hope you understand my statement here. This is a reform which will address the problem. It is not focusing on why the problem is, right, or why there is a creation of a problem. So what do you mean by this? I'll give a parallel example. Let me know whether it makes sense or not. Right? During pandemic there was, right, basically you will basically get affected or infected, and then there is a treatment. But which is better? Not getting infected. Again, don't say that, sir, you're accusing me. Nothing of that sort. Which is better? Precaution or getting a treatment after getting infected? I hope you understand. I hope you understand. Sir, what is the meaning in this context? Why are we not implementing more and more reforms which will ensure lower creation of NPA? I hope you understand this. Why are we not focusing on implementing more and more reforms which will reduce the creation of NPA? Because this is a reform which will address the problem. NPA has happened. Now we are addressing the problem. Right? So again, I hope you understand. It's not a criticism against the policy of the government. Is it a good reform? Of course, yes. Of course, yes, it is a good reform. But the criticism here is that rather than implementing more and more reforms which will resolve NPAs, we should implement more reforms which will reduce the creation of NPAs. So how can you reduce the creation of NPAs? Be careful when you're giving loans to businessmen such as Mr. Vijay Mallya. Simple. I hope you understand. Right? When RBI says do not keep on giving more and more loans to certain businesses when their financials are like this, don't take a risk by giving loans to some of them. Right? So implement certain policies which will prevent the creation of NPAs, which will make you much more careful when you're issuing NPAs rather than running behind NPAs when they're created. So that is basically our drawback here. I hope you understand this. It's a reform which will address the NPAs, but it is a reform. It is basically a cure. It is basically a treatment to a disease. Why not ensure that the disease itself will not happen? Okay. Next one. Because government is providing guarantees like this. Right? A bank has given a loan. Company has defaulted on the payment. Now it has remained NPA for 5 years or 6 years. Now the bank will take it too. Right? Let's say the NARCL. Now don't you think because government is anyway giving a guarantee that if NARCL will offer, let's say, 20 crore rupees, you will get 20 crore rupees. The bank will be much more complacent here. The bank is much more, right, complacent. Why? They should be, to begin with, very careful when they're giving loans. Now they've given loans and they become NPAs. They're sitting in the balance sheet for 5 years. Now they want to sell it to NARCL. Whose fault is that it has become an NPA? I hope you understand. Right? That could basically lead to certain activities in the bank where they know that government will provide the assistance. They'll keep on giving loans to the borrowers who are not supposed to get a loan. I'll give you an example. There's a term here that I've used, right? Dodgy loans. Right? There's a concept called as evergreening of loans. What do you mean by evergreening of the loans? Have a look at this. Imagine here is a bank. Bank has given a loan to a company. Right? Let's say you are the bank manager and the company. Both of us are very good friends. Very, very good friends. My company is not working very well. Right? It has incurred losses. Now I'm supposed to make a repayment. If I don't make a repayment, what you will do? You will simply go to NCLT, file an application. But because we are very close friends, either financially or, right, let's say from high school itself, what you will do is you will give me a new loan. Have a look at this. You will give me a new loan now. And what will I do with the new loan? I will use the new loan to repay old loan. Is it making sense to you? Right? I hope you understand this. What is this problem here? Right? Why these are called as dodgy loans? Dodgy means, right, very, very dangerous loans. Right? I've taken a loan from a bank. I'm supposed to incur a loss. I'm incurring a loss. I will not be able to repay the loan. If I don't repay, it becomes an NPA. But what you will do is you will give me a new loan. I will use the new loan to repay old loan to you. But don't you think because of this system, right, the NPAs which will occur in the bank in the future will be very large? And there have been many instances which have thrown out this example, or there have been many cases in recent times where this example has been implemented. Right? Is the problem okay with all of you? Now, if you ask the bank manager, sir, why are you doing it? Why are you doing it? One, the reason could be corruption in the system. Right? Or second, right, the bank manager and the company owner, both are, let's say, husband and wife. Right? Or the third reason could be bank manager says, we don't have to worry. This will become NPA. I'll keep it in my balance sheet for 5 years. Then I will sell it to NARCL. Then I'll simply sell it to NARCL. Don't you think these kind of reforms might breed the misuse or the abuse of the provisions? That is the second concern. And the third concern is, even if you transfer it to NARCL, what is the guarantee how much NARCL will be able to recover from the market? Because these are very, very old NPAs, legacy NPAs. Very difficult to find a buyer. Even if you find a buyer, at what price will the buyer purchase it? Could be a fraction of the recovery value. Right? So these are some of the concerns regarding NARCL. That's a critical evaluation of NARCL. Okay? Done? Right, so first reform very difficult. My dear, I am telling you, it's a reform to take care of NPA. Rather than implementing more reforms like this, government should implement other reforms where creation of NPAs will be minimized. How can we do that? Right, let's say conduct a very thorough research before giving a loan to a borrower. Before giving a loan to a borrower, conduct a very thorough research. Ensure there is no evergreening of the loans. Don't you think if you ensure all of this, the creation of NPAs will be minimized? That is the first point. Okay. Right, so this is the discussion regarding the concept of NARCL. NARCL, please be very careful. Okay. What kind of asset NARCL will sell in the market? Right, bad loans. Right, I hope you understand. Bad loans which are sitting on the balance sheet of the bank for a very long time. Right, again I'm repeating, what is a long time? It is not defined. You can simply take it to IBC, but in IBC, who will be there to purchase? Can you take a loan which is a 5-year NPA to IBC today? Does it make sense to you? Right, no, that is not the basic idea. Okay. During this time period of asset selling by IDFC, is the case still going on in the concerned asset? What do you mean by case here? Right, what do you mean by the case here? We are not taking those cases, we are not taking those NPAs where the cases are there because there will be no buyer for it. We are taking these particular assets, and sir, what if there is already a case in case of NARCL? Right, that is under IBC. Right, if that is shifted here under NARCL, they will not handle it under IBC. Why will they handle same asset at two different places? They will not handle it. Okay, done. Let me go to the next concept here. Let me go to the next concept. Cooperatives. Let me go to the next concept, idea of cooperatives. Okay, now, what is a cooperative? Let's start. What is a cooperative? Cooperative is simply group of at least 10 people. I repeat, what do you mean by cooperative here? Cooperative simply means it is a group of at least 10 people. Right? At least means 10 or more than 10 people. Now, why have they come together? Why they formed a group? They want to achieve a common objective. Is it okay? I'll repeat it. What is a cooperative? Cooperative is a group of at least 10 people. And when I say at least 10 people, all of them are above the age of 18 years. That is, all of them are adults. In simple terms, all of them are adults. So cooperative is a group of at least 10 people who have come together to achieve a common objective. For example, have you heard of milk cooperatives? Let me know. I'll give you some of the examples. Have you heard of milk cooperatives? Sir, any example of a milk cooperative? Right, Amul. Best example is Amul. Have you not heard of Amul? Right? Let's say one example, milk cooperative. Can I give you one more example? Fertilizer cooperative. And I'll connect it to current affairs only. Think of it. Fertilizer cooperative. Sir, any example of a fertilizer cooperative? How many of you have come across the company IFCO very recently? Or cooperative. It's not company. Cooperative IFCO very recently. Let me check whether you read newspapers or not. In what context have you come across the name of this IFCO? In what context? Nano urea, nano DAP. I hope you understand all these are current affairs only. That's the reason how you connect dots here. I hope you understand this is how you connect the dots. You don't have to remember the list of cooperatives because you already know what kind of cooperatives are there in current affairs. You can easily bring them here, write them. Right? Have you heard of PMC, Punjab Maharashtra Cooperative Bank? Have you heard of this or not? Right? 3 years ago this was in the newspaper. Even today we are reeling because of the PMC, Punjab Maharashtra Cooperative Bank. So argument is simple here. Cooperative means it's a group of at least 10 people who are above the age of 10 years who have come together to achieve a common objective. Right? And understand this, these cooperatives can function within one state. I repeat, these cooperatives can function within one state or they can function across multiple states. If they are functioning in only one state, these are called as single state cooperative. Single state cooperative. And whenever there's a single state cooperative, it has to be registered with the state government. It has to be registered with the state government. Right? So single state cooperative and the state government. And when I say registered with the state government will have an authority by the name of Registrar of Cooperative Societies. Registrar of Cooperative Societies, RCS. Remember this. Right? So I'll repeat it again. Whenever we have a cooperative which is working in only one state, this is called as a single state cooperative. And this single state cooperative should be registered with the authority set up by the state government, that is Registrar of Cooperative Societies. Now, if the cooperative is not working in one state, it is working under multiple states. Not in one state, in multiple states. Should we ask the cooperative to be registered with the state government? No. In case of multi-state cooperative. In case of multi-state cooperative, these are registered with the Register of Cooperative Societies, that is RCS, set up by the central government. Set up by the central government or union government. Right? Any problem here? It should make perfect sense to you. And we have cooperatives. These are divided into single state, multi-state. Single state, only one state, state government, RCS. Multi-state, of course, one state cannot regulate them. It will come under the central government, RCS. Right? So single state and multi-state. Now come to the next point. The cooperatives are present in multiple sectors. For example, we have cooperatives in fertilizer. We have cooperatives in handicrafts. We have cooperatives in textile. We have cooperatives in sugar, in milk. And come to the point here, we have cooperatives within banking also. Within the banking sector also, there are cooperatives. Now come to the banking sector here. Cooperatives in the banking sector are divided into two parts. One is called as a rural cooperative and the second one is urban cooperative. Rural, urban. Now, what is the basic idea here? Whenever these are present in villages, mainly in the villages, these are referred to as rural cooperatives. And whenever you talk about, right, let's say cooperatives which are present in the districts, cooperatives which are present in state capitals, etc., these are referred to as urban cooperatives. Now, urban cooperatives are further divided into two types, scheduled as well as non-scheduled. Okay, right, scheduled as well as non-scheduled. And what about rural cooperatives? Rural cooperatives are divided into two parts here based on their lending activity. Based on their lending activities, the rural cooperatives are divided into two parts. So how is that possible? So have a look at this. Whenever you talk about rural part, that is agriculture sector is the mainstay. In the agriculture sector, we generally divide the loans based on the term or the tenure of the loans. I repeat, in agriculture sector, we divide the loans based on the term or the tenure of the loans. That is, whenever you take a long-term loan, the tenure of the long-term loan is right 5 years, above 5 years. And whenever you take short and medium term, short term is generally up to 15 months and medium term is up to 60 months. Again, do not worry for what purpose do they take, sir, right? Any example of it, etc., etc. When I take up agriculture sector, I will tell you. There's a slide on this. I will tell this again. Please don't worry about it. So whenever you talk about agriculture loans, we can divide the agriculture loans into long term, short and medium term. And those institutions which will provide short-term loans is short and medium-term loans. It is one classification here. And those which will provide long-term loans, it is one more classification. Is it okay? Short and medium-term, this classification is there. And long-term, this classification is there. For example, long-term loans, right? For purchasing of tractor, for purchasing of one more piece of land. These are long-term loans, more than 60 months. So the argument is long-term loans, this structure is there for cooperatives. Short-term loans and medium-term loans, this is one more structure of the cooperatives, right? Again, within short and medium-term, we have a three-layer structure. At the top, we have state cooperative banks. Below state cooperative banks, we have DCCBs, District Central Cooperative Bank. And below District Central Cooperative Bank, we have a Primary Agriculture Credit Societies, PACS. PACS. Focus on this PACS. Please look at the name and tell me, is the term bank mentioned here? Look at it. Please look at the name and tell me, is the term bank mentioned in the name? The bank is not mentioned in the name. It should be very clear to you. I'm talking about this box. Right? What does it mean? These are not banks. I hope you understand. These are not banks. Look at all the other boxes. The picture is there right in front of you. Look at all the other boxes. Tell me, in every other box, is the term bank mentioned or not? Is the logic okay? In every other box that is there for the classification of the cooperative bank, is the term bank mentioned or not? Answer is yes, by the way. Right? Bank here, bank is here. Right? A bank is here, 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 and here. Right? So in all the other boxes, the term bank is mentioned. Only in this box, that is a Primary Agriculture Credit Societies, the term bank is not mentioned. It's a society. It's registered under Cooperatives Act of, let's say, central government or the state government. But this is not a bank. This is simply a society. It's not a bank. So what is the importance of it? What is the importance of it? Now, if it is a society, not only a bank, can I simply say it will provide the services beyond the banking services? Point number one. It will provide services not just limited to banking, but beyond banking. Sir, what do you mean by that? There are a lot of these primary agriculture credit societies which will provide banking services to you. That is, they will collect a deposit, they will give you loan, etc. But apart from that, they also sell fertilizer. They also sell, right? Have a look at this. They also sell seeds. They also provide warehousing facility. They also provide marketing facility. In simple terms, anything related to agriculture sector, right? These will provide. Point number one. And point number two, please remember this. Will the deposit, so that is, imagine you have kept a bank deposit, you have kept a deposit with a PSE, will it be covered under DICGC? Let me know. You have kept, let's say, 100 rupee with the PSES. Will it be provided with insurance by DICGC? Answer is no. Answer is simply no, right? The DICGC will not provide any kind of insurance for this. Why? It is not a bank. It's as simple as that. It's not a bank. If it is not a bank, why will DICGC provide insurance for this? So please be very careful. This is a structure. Now, should you do a PhD on this? Absolutely no. Do not waste your time. Right? Do not waste your time. What are the purposes? That should be very simple to you. In case of rural cooperatives, we have one structure which will provide short-term and medium-term loans to agriculture sector. But in addition to that, in the lowest level, that is at the village level, where we have the PSEs, in addition to banking services, they will also provide many other services in support of agriculture sector. For example, selling fertilizer, selling seeds, right? Selling many other inputs in the agriculture sector. And on the other hand, we also have P Card B and S Card B. That is, P Card B simply means Primary Cooperative Agriculture and Rural Development Bank, right? P Card B and S Card B, State Cooperative Agriculture and Rural Development Bank. So P Card B, S Card B, it's again a two-step mechanism here or two-layer mechanism, which will provide long-term loans in the market, right? That is in the villages. And on the other hand, short and medium-term loans are provided here. But in addition to this, we also have within the cooperatives, urban cooperatives, which will provide right, normal banking services. Right, sir, what do you mean by urban cooperative? It's a cooperative which is set up in urban level or urban area. It will function just like any other bank. For example, you will keep FD in a SBI. Can you keep a fixed deposit in urban cooperative? Of course, yes. I hope you understand. Of course, yes. You will have locker facility in SBI. Will you have locker facility in urban cooperative? Again, yes. Urban cooperatives will give loans, right, just like State Bank of India. So have a look at this, right? Urban cooperative banks, just like any other bank, will provide services. Here in a rural part, here in urban part. This is basically the structure of cooperative banking in India. Okay, structure of cooperative banking in India. Done? Okay, right. So let's take a pause here. Right, let me discuss certain questions. Let's take a pause. Right. So before that, any questions that you people have? So these PSCs are present in every rural area. It's not a condition per se. I hope you understand. It's not a condition. It's not a rule that everywhere we should have a PSC. It all depends on whether the cooperatives are set up or not. Okay. Only PSCs does not belong to bank category. Yes, in this structure of cooperative banking that I've discussed, PSCs are purely societies registered under Cooperatives Act of the Union or the state government. But these are not banks. Okay. Why PSC is not under P Card B? Why do you think it should be under P Card B? I'm saying PSCs will provide short-term loans to agriculture sector. Short and medium term should automatically come under this side. Why not? Right? You're asking me why not this side? It doesn't provide medium term, so it doesn't provide long-term loans. Hence, it will not be kept on the other side. It will be kept on this side. Okay. What is the procedure to set up cooperatives? Right? Why do you want to understand all of it? You will get it. Right? You can visit the RCS website of any state government. They will tell you what documents you're supposed to provide, how many people are supposed to be there, how much should be each person's contribution in setting up of this PSC. Right? Everything will be given to you. Okay, done. Right? Look at the questions here. Look at the questions. Okay. Many of you basically told me that, sir, you have not covered questions from GDP. I've given you the questions. Right? Now let's start. Which among the following steps is most likely to be taken at the time of economic recession? Right, during economic recession, which of the following is most likely to be undertaken by the government? Let's start. Right, answer it quickly because I'm pretty sure all of you have seen the question now. Answer it quickly. Okay, 55% have answered correctly. Why? It should have been more, right? It should have been more. Let's start. Which among the following steps is most likely to be taken at the time of economic recession? Cut in the tax rates accompanied by increase in tax rates. Do you think this is the right one? Right, sir, what is the context? Where are you discussing all of it? We have discussed the concept of counter-cyclical and pro-cyclical policies. And we have discussed if there is a recession, what should the government do? If there is very good expansion in the economy, what should government do? Right, the idea of a counter-cyclical fiscal policy. I told you government should have counter-cyclical fiscal policy. So if you cut the tax rate, of course, yes, demand will increase. But if you increase the interest rate, do you think the demand will increase? Now that you have discussed a very good chunk of banking, you tell me. If the interest rates in the economy will start increasing, do you think demand will increase? Answer is no. But there is recession. There is always a recession in the economy. Don't you think that will further push economy into, right, let's say depression? So A is wrong. Increase in the expenditure on public projects. Will it not help? Right, if government of India starts investing more and more, starts constructing more and more projects, will it not help in promotion of recovery in the economy? Of course, yes. B is, let's say, one option. Let's keep it. Increase in the tax rates accompanied by reduction in the interest rate. You will reduce interest rate. That will help in higher demand. But what about the tax rates? I hope you understand. What about increasing tax rate? It is basically a flip-flop of option A. Right, in option A, it said cutting tax rate, that will help us. But here it says increase the tax rate. It will not help recession. Okay, last one. Reduction of expenditure on public project. You are having a pro-cyclical policy during economic recession. Is it good? No. That will push the economy into further recession. Okay, so D is also wrong. The right option for the question is option B. Okay. Now, can we solve it directly? Rather than starting a poll, etc., can we solve it directly? Because it's a straightforward question. Right, the term GDP deflator is a ratio between what? We have discussed GDP deflator, by the way. We have discussed GDP deflator. I just want to add a point here. Right, most of you are answering correct. Absolutely correct. I'm happy. Right, nominal GDP by real GDP. Right, it means you're revising. Right, very good. I'm happy. Okay, now I just wanted to add one point here. I've discussed most of it. One point, let me add. I said GDP deflator is the most comprehensive measure of inflation in the economy. All of you agree? I'll repeat the statement here. GDP deflator is the most comprehensive measurement of inflation in the economy. Why? We are covering the whole gamut of goods and services. In CPI and WPI, we did not cover all the goods and services. We covered a basket. But when you talk about GDP, the whole, right, the goods and services, final goods, of course, final goods and services will be covered. So I say GDP deflator is the most comprehensive measurement of inflation. But I also told you that because we calculate GDP quarter-wise, we do not make our decisions based on GDP deflator. But let me add a point here. This is where I forgot to add a point. In case of India, the WPI, wholesale price index, by default is considered as a GDP deflator. Remember this. I will repeat the statement here again. The WPI, wholesale price index, by default will be considered as GDP deflator. Is my statement okay with all of you? I'll repeat the process here again. GDP deflator is the most comprehensive, but we do not have GDP deflator month-wise, right? But we need some indicator. We need certain indicator of inflation. So what we do is we use a WPI as a de facto GDP deflator in India, right? Please remember this. Can be suddenly asked in the prelims. Now you will ask me, sir, why not CPI? Why not CPI? The reason is simple. When you talk about CPI, it is a price that is paid by the customer. All of you understand this? Right? The CPI, it is a price that is paid by the customer. Right? And don't you think when the customer pays the prices, there could be multiple intermediaries. Profit motive will be there. Multiple taxes will be there, etc., etc., etc. Okay? That is the precise reason. CPI is not used as a de facto GDP deflator. WPI is used as a de facto GDP deflator. Is WPI calculated monthly? Yes. WPI is calculated for every month. For January, this has been there in the newspaper. For February, this has been there in the newspaper. In fact, if you read yesterday's newspaper, I'd asked you to read article on stagflation. I'd asked you people to read an article on stagflation. Right? I'm pretty sure you've come across, right, the data for CPI which is mentioned there, etc., etc. Okay? Done? Right? So this is a discussion regarding WPI. Okay? Now, a descriptive question here. Explain the difference between computing methodology of India's gross domestic product before 2015 and after 2015. You're expected to write the answer in 150 words. 150 words. We have spent around 1 hour, or let's say around 1.5 hours to discuss methodology. And now you're basically supposed to, right, push everything into 150 words. Right, compress everything into 150 words. Right, that's a challenge many of the times. Now, India has introduced a new methodology starting 2015, right? And this new methodology is associated with production methodology of calculation GDP. Do you remember this or not? Production methodology or output method. Right, production methodology or output method. Now, what are the different changes? Earlier, to determine the GDP, we used to use factor cost. Now we are using market prices. In fact, I've told you what is the difference between a factor cost and market prices. Earlier, the base year was 2004 and 5. Now the base year is 11 and 12. Okay, now the base year is 11 and 12. Earlier, IIP was considered. I have not discussed IIP. Have patience. We'll discuss it. Right. In fact, I'll tell you where we'll discuss IIP. There is a chapter by the name of industries. Later, we'll cover a chapter called as industries. And in the industries, there is one indicator, index of industrial production. We'll discuss it. Don't worry. Earlier, IIP data was also taken for calculation of GDP. Today, we don't use it. We basically use the concept of GVA, gross value addition. And GVA we have discussed. Right, how GVA is calculated, etc., etc. We have discussed that, by the way. And finally, earlier production data was collected through a survey which was referred to as ASI. Do you remember the long form of ASI? Annual Survey of Industries. ASI, Annual Survey of Industries. Now we have introduced the new system, MCA 21, Ministry of Corporate Affairs 21. Okay, right. So this is the discussion regarding, this is right the approach that you're supposed to follow regarding, right, the question that has been asked in means. Done. Okay. Now again, please understand. Whenever you write answer, focus on the main body. There are 3 components to the answer writing. Whenever you write an answer, there are 3 components in the answer: intro, main body, and conclusion. I generally find students will miss the mark because they're so much focused on introduction. I hope you understand this. I generally find that students will not score very good marks because they miss out on focusing on main body. They'll focus on intro. You'll start writing the intro. You'll keep on writing intro only. And by the time you realize you've already crossed 150 words in intro itself, you start writing. You know what government did. You know what minister did. You know what they did. You know what he did. Right? The intro itself is 250 words. So do not focus too much on intro. Keep it short. Keep it crisp, to the point. Right? Come to the main body. And that's the reason we are saying the term main body here. right? So main body is very important, right? So main body should consist of majority of the words, then come to the conclusion. Okay, right? So this is how you approach the questions which are given in UPSC. And again, you will not be able to learn it overnight. I hope you understand. You will not be able to learn it overnight. You will be able to learn it with practice. Practice, 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 practice. Okay, done. Right. So these are the questions that I wanted to discuss, which we had skipped from chapter 1. We have covered it. So chapter 2, we have covered it today. Right. So what about the questions on money and banking? We'll take it up tomorrow. Don't worry. Certain more concepts are left out in banking sector. We'll finish that. Then we'll take up the questions on money and banking tomorrow. Done. Now, any kind of question you people have, let me know. Let me address those questions. Can the work done by NASL be termed as debt securitization? Again, there's a concept called as debt securitization that is not needed. I'm pretty sure you've come across the term debt securitization because you typed it on Google. You typed ARCs on the Google, and suddenly the concept of ARC, when you're reading, right, surfing through it, they will throw the term debt securitization. Is it required? Is it required for UPSC? Absolutely no. Yes, they are also involved in debt securitization. Okay. Is Sivan Central Cooperative Bank an example of DCCB? I don't know where have you picked up that example. Right? I hope you understand. I'm a human. There are hundreds of cooperative banks in India. I will not know what exact cooperative bank you're talking about. Okay. So government is giving guarantees under NASL. Is it not creating a problem? Of course, there is always a criticism. The criticism is that the government is using taxpayers' money. The government is using a taxpayers' money. Right? That's a criticism. Why a JPC demand on Adani in Parliament? My dear, don't you think the joint parliamentary committee is more of a political concept? It's more of a politics. I don't want to discuss JPC, how it is established, etc., etc. in economic class. In economic survey, they have given NPS have reduced. It is due to write-off or NASL or disinvestment. It is mainly due to write-offs. It is mainly due to write-offs. For example, I told you the first case by NASL has been taken up in the last month. I hope you understand. It has been taken up in the last month. Okay. Will DCCB give loans only for businesses? No. DCCB, why it is called as a DCCB? Understand this. It is set up generally at a district level. It is set up at a district level. But it will keep on doing the same activity like a bank. I hope you understand. District Central Cooperative Bank means it will help the PSCs to operate. It will assist the PSCs in operations. And as usual, it will keep on providing banking services to all the other customers. Collection of deposits, giving of loans, etc., etc. It will continue. Okay. So which book is good for reference? You pick up any book, my dear. Trust me, you pick up any one book. One book is more than sufficient. NASL is selling assets, which is borrower given as security, please. Again, I don't understand the question, but anyways, I believe you're asking me. If NASL takes these assets, who will give the security receipts? NASL will give the security receipt to the bank. Right? Let's say NASL says, imagine you're NASL, I'm a bank. Right? One company account is there. I want you to sell it in the market. Right? You're NASL. Right? You look at the account and say, the value that you're expecting is 100 crore. Right? The company owes you 100 crore, but nobody will give you 100 crore. The market valuation is, let's say, 20 crore rupees, which means you are offering 20 crore rupees to me. Out of the 20 crore, 15% of it, 3 crore rupees is given in the form of upfront payment. You will pay the 3 crore rupees to me right now. Remaining 17 crore rupees, you will pay it in the form of security receipt. That is, you will sell the asset in the market, collect the money, and then pay it. But again, when you enter into the accounting concept, right, it's a very technical idea. The ARCs will also have a concept of securitization of the debt, etc., etc. That is not needed for UPSC. Okay. Can you explain how rural cooperatives are divided? Rural cooperatives are divided based on the type of loans that they provide. Based on types of loans are provided. For example, if the rural cooperatives will provide a short-term loan or a medium-term. Again, don't worry about what is the short-term and medium-term in agriculture sector. I will tell you later. When I take up agriculture, I will tell you. Please don't worry about it today. So if a bank that is a cooperative bank provides a short-term or medium-term loan to agriculture sector, it is right on one side. If the other bank provides long-term loans to agriculture sector, it is on the other side. That is how the division is done in the rural cooperatives. So nominal GDP includes which inflation? WPI, CPI. My dear, you are confused about the concept itself. What is nominal GDP? You tell me what is nominal GDP. How do you calculate nominal GDP? Whatever is the current market price, you will take it to calculate nominal GDP. Are you accounting for inflation there? Are you accounting for inflation in the nominal GDP? Of course, no. Because if you simply take the current market price, you are not removing inflation. You are right. The impact of inflation is already there in the market price. So it's not accounting for inflation there. Okay. Okay, done. Right. Let me stop the discussion now. Let me stop the discussion. Tomorrow we'll continue with aspects related to cooperative banking. What are the issues, etc., etc. We'll discuss that tomorrow. Okay. Now, if you ask me, please revise this. It's an important chapter. Please revise it. We have spent around 7 hours on money and banking. Right. It will take at least around 2 to 3 more hours. It's very important. Okay. So revise it. Read a newspaper, especially business page. I'm worried about only business page. Please read the business page. Done. Okay. So let me stop the discussion today here. See you tomorrow again at 6 a.m. Take care. Have a great day.